Please let me know in the chat whether the
Welcome
sound is
to
okay.
the Demystifying Bitcoin track. 12 years into its creation, Bitcoin is just beginning to gain institutional acceptance. To continue to encourage adoption, education is extremely important. And while constructive criticism of Bitcoin is healthy, unfortunately, the mainstream media and influential financial research institutions still dismiss Bitcoin based on stale information and flawed analysis. In this track, we revisit some of Bitcoin's most common misperceptions in the hopes of advancing the discussion and understanding of Bitcoin and the important role it will play in society.
Hello, my name is Nick Carter. I'm a general partner at Castle Island Ventures and the co-founder of Coinmetrics. I'm here to talk about Bitcoin's energy dynamics, why it consumes so much energy, and what we can expect from it in the future as the protocol evolves. This is a very contentious topic, and I think when the facts are considered, it's demystified, we can become much more comfortable with its energy usage. So that's what I'm going to talk about today. So the first thing, a key premise for this entire discussion is that Bitcoin has a claim on some of the Earth's resources. And so Bitcoin is this global, neutral monetary network. It provides the settlement of value in an apolitical sense without regard for who is using the network. And it transacts tens of billions of dollars a day and stores the wealth of hundreds and hundreds of billions of dollars. And it's used by, we don't know exactly, but 50 to 100 million people worldwide. And so it provides a genuine utility to tens of millions of people. And so this is a key premise for understanding and conceptualizing any of the energy dynamics, because you have to acknowledge the validity of this network to reason about the costs. If you reject the utility of this network, then no cost, no energy outlay is going to be worth it. But this is a key premise, and of course, other speakers today will be talking about this far more in depth, so we won't go into too much. Key premise of the talk, Bitcoin has a claim on some of society's resources, the same way that gold does, for instance. So let's just reset and remind ourselves why Bitcoin consumes any energy at all. So there's really a number of reasons, but there's two primary ones. So the first one has to do with providing settlement assurances, effectively providing to users of the system the assurance that their transaction will settle, will have finality, and will have a single linear history of events in the Bitcoin system. And so the miners incur this cost to create new blocks for the privilege of adding transactions to blocks. And in exchange for that, they get compensated with new units of Bitcoin and fees. And so this energy cost incurred by miners encourages them to behave honestly and to pursue a single linear history of the network, as opposed to branching it into other directions or creating these reorganizations where they change the history of the network. The users of this system, they want to have the assurances that their transactions are going to settle, that they're going to be final, and that nothing's going to be changed after the fact. And so the energy cost that accompanies transactions and that is incurred by the miners, that is what grants users of the system those strong assurances. And of course, as I said, at peak, Bitcoin will process $10 to $20 billion a day in final settlements, and it stores around $600 billion today, although of course that changes on a day-to-day basis. So it's providing a genuine monetary transactional utility in a way that's quite distinct from other transactional systems. Additionally, and this is often overlooked, Bitcoin mining is a system of distributing the new units of Bitcoin to the world at large. And so when Satoshi devised Bitcoin in 2008 and then created it in 2009, Satoshi had this conundrum: how am I going to actually distribute the units of this commodity to the world at large? Satoshi could have emailed their friends, new units of Bitcoin, but that wouldn't have exactly been a fair or credible way to initially distribute these units to the world. And so the method that Satoshi settled on was proof of work, where effectively you have to spend energy and computational resources in order to obtain new units of Bitcoin. And so miners themselves, they're not particularly privileged in terms of their access to the monetary issuance, unlike, say, the Federal Reserve is privileged in terms of access to new dollars. For them, it's costless to create the dollars. Because miners have to incur this cost, they have relatively thin margins historically, and so no one is able to extract seigniorage, able to extract a significant rent from their position as the monetary issuer. Instead, it's this very much free market process. And so proof of work solves this decentralized initial issuance problem. And that's a really key thing to remember as we consider its sort of energy outlay. So as I said, Bitcoin's security and reliability derives from proof of work. And so the costliness of the ledger is what links this digital system to the physical world. The fact that there are actual physical costs associated with creating new ledger entries, that links the analog and the digital. And an analogy here you could consider would be Mesopotamian clay tablets, from 3000 BC, where these accounting relationships would be inserted onto wet clay, and X owes Y, Z amounts of barley, for instance, and that relationship is described on the clay tablet, and then it's set outside in the sun to dry. And once the tablet is dried, that relationship is forever encoded. It can't be changed. It can't be reversed. Bitcoin blocks the accumulation of computational work in progressive Bitcoin blocks, gives you a similar kind of assurance. Once a transaction has occurred in the Bitcoin ledger, once sufficient blocks have been mined, that transaction is assumed to be final. And so in the case of the clay tablets, it's the sun's energy which is providing you that kind of finality and calcifying the ledger and effectively making it robust and immutable. In the case of Bitcoin, it's computational work which does that same thing. Now, a lot of people say, well, why can't we just strip the proof of work out of Bitcoin and insert a system like proof of stake? Well, if you were to do that in proof of stake, you would create influence proportional to the number of coins held. In the case of Bitcoin, that would make these large custodians, banks, effectively, that control lots of coins on behalf of users. It would make them the stewards of the network. It would give them effective control. And unfortunately, it's the case today that many, a large fraction of all the outstanding Bitcoins are controlled by these custodians. And so if you were to eliminate the proof of work process and impose something like proof of stake, or delegate control to these third-party validators with a lot of influence, you would lose the nice assurances. You would lose the decentralization of the network effectively. So as far as we know, proof of work provides pretty unique assurances that aren't recaptured by any alternative system. So as I mentioned before, proof of work has a couple different functions. One of them is to mediate the initial issuance of new Bitcoins. And it's interestingly the fact that historically, the vast majority of Bitcoin's energy expenditure derives from this issuance. So miners are compensated in two ways. One is through the collection of new units of Bitcoin, and then the second is through fees that users attach to transactions. But historically, the issuance of new units of Bitcoin has dominated their revenue. It's been over 90% of their revenue historically, with transaction fees being much more minor. And so when you think about the energy consumption of the Bitcoin system, this is really critical because you have to decompose transactional intensity from miner revenue and hence energy spend. It's not the case that adding more transactions will dramatically increase the energy expenditure of the Bitcoin network, as a lot of people mistakenly believe. Most of the energy consumption is really a function of the price of Bitcoin and, of course, the value of that new issuance that miners are collecting. That's really what's going to drive the energy consumption over the next few years, not the number of transactions. Bitcoin can scale up the number of transactions or the value of transactions without really having a linear proportional effect on the amount of energy that miners are consuming. So it's really, in the near and medium term, much more a function of the price of Bitcoin and the value of the new reward that miners are incurring. And this is kind of analogous to gold again. You shouldn't think of Bitcoin's energy dynamics as analogous to something like Visa. You should think of it as similar to gold, where the vast majority of the energy expended by gold production, manufacturing, extraction, has to do with mining the gold, pulling it out of the ground and refining it. It has much less to do with moving the gold on trucks or boats or anything like that. It's kind of similar with Bitcoin. Most of the energy outlay in Bitcoin's case is a function of the initial creation of Bitcoins. And so that's a key thing to remember, because gold is this useful commodity that people use to store their wealth outside the confines of the state. The extraction of gold is kind of tolerated, even if it's not particularly ecological. And same thing with Bitcoin. The production of Bitcoin is, still, yields and provides us with a system which is of value to society. And so it's still, something that we should accommodate effectively. Now, let's just sort of set the table and actually look at some of the numbers here. So as of today, and there is some uncertainty with all these numbers, a lot of them are estimates. We can't have perfect direct knowledge of all these things because miners are kind of hard to get data from. It's this global set of entities that we can't necessarily triangulate all of who they are. But based on the kind of state-of-the-art knowledge we have today, Bitcoin miners consume about 1/4% of all the world's electricity and about 1/10% of all the world's energy production, because the world produces a lot more energy than it does mere electricity. And so that's kind of where we are. And whether you think that's really high or really low has to do with your view of sort of the merits of Bitcoin, whether it's a worthwhile thing or not. Now, in terms of the actual composition of the energy inputs, that gets much more tricky to assess, because we have to determine whether miners are actually using renewable or non-renewable sources. It's kind of hard to know, right? It's difficult to just ask the miners. So the various estimates we have historically, Cambridge in 2020 ascertained that miners were around 39% renewable. More recent studies, the Bitcoin Mining Council, which is this group of North American and other miners, came out with some disclosures earlier this year, and they found that within that sample, the sustainability of miner operations was around 67%. If you combine that with a conservative assumption for the default energy mix for the world for the out-of-sample data, you get a figure of around 46% sustainable. Now, sustainable means renewable plus nuclear in this instance. And so that's probably better than the global average grid. Now, it's, again, a lot of that is guesswork, and we won't really know what the true sustainability of Bitcoin mining is until we get a better idea of where miners are. But our best guess is that Bitcoin is responsible for around 50 megatons of CO2 emissions per year, or around 0.1% of the world's emissions. Now, what does this actually mean? I mean, what does this compare to? So you can compare it to individual small countries, as is very commonly done, or you can understand that the world is this sort of highly globalized place, and that for the most part, we outsource our industrial capacity to one or two major countries, which account for the vast majority of sort of energy production and consumption. So Bitcoin's current energy usage is around 0.7% of China's energy production and between 1% to 2% of America's. And so it just really depends, how you want to compare it to the global consumers of energy. Bitcoin's energy footprint is 12 times smaller than always-on devices in U.S. households. It's 15 times less than electricity lost in transit globally every year. And now I think industry level comparisons are much more elucidating than country levels, because Bitcoin is not a country, it's an industry, right? It's an industry that provides monetary assurances, transactions, and savings. And so, this industry analysis is not that commonly done because typically, as far as policy is concerned, we're much more concerned with, well, what's the nature of the grid? How sustainable is the grid? But you can certainly look at individual sources of energy consumption, and you can compare them to Bitcoin if you want. So there's all sorts of numbers here. Bitcoin is, slightly less than the amount of energy consumed just by domestic tumble dryers globally. And of course, a tumble dryer is a discretionary thing. You can always dry your clothes on the line if you want, but it improves our quality of life. So we accept the fact that it consumes some energy. Bitcoin compares favorably with the energy used by copper mining, zinc mining, gold mining. Those all, as far as we can tell, have a greater energy impact. Now, that's not to say that those industries aren't useful. I mean, they provide, genuinely useful metals. This is just to contextualize Bitcoin so you can compare it to other industry level uses of energy. And a lot of these industries, whether it's refrigeration, air conditioning, heating, tumble dryers, washing machines, they massively improve our quality of life. So we don't often think that critically about the energy requirements of those industries because they brought us into modernity. I mean, they represent the trappings of civilization. Air conditioning meant that we could live in hotter places and just live more comfortably. So we don't regret the energy that's used on them, the same way that we shouldn't regret the energy used for this novel monetary transmission technology. This is just the mark of civilizational progress, obtaining more energy and then putting it to use in sort of efficient sources that make our lives better. So just to summarize that section, I mean, the perceived merit of an application's energy consumption is really ultimately a function of your own subjective view of that application's utility, right? And so if you don't believe a certain application has utility, you're going to believe that the energy associated with it is a waste. And certainly a lot of people don't believe that gold has a role in modern society. Certainly many people don't believe that Bitcoin does. But things like gold is a means of storing your wealth outside the banking system, outside the state. Equivalently, so is Bitcoin, in a way that's has completely differentiated qualities from these other monetary systems. So to the extent Bitcoin has utility, to the extent we acknowledge it has utility, its energy consumption becomes much more tractable and something that we can get more comfortable with. Satoshi, mentioned this before, saying, gold mining is a waste, but gold itself facilitates these new transactions that wouldn't be possible without it. So it's not a net waste. And similarly with Bitcoin, the issuance of Bitcoin and the energy associated with that allows us to have Bitcoin, which provides these interesting monetary assurances to tens of millions of people worldwide. And if you look on sort of a per capita basis, and other talks, I'm sure we'll cover this today, we're talking about disproportionate penetration in places with weak property rights, poor governance, high inflation, strong capital controls, places where people are very unfree from a monetary perspective. And so, not everyone watching this talk will be in a situation like that. Bitcoin may not be that relevant to them. But rest assured, the highest Bitcoin penetration is in places like Argentina, Venezuela, Turkey, Nigeria, Kenya. These are places where the independent system of property rights proposed by Bitcoin is extremely relevant to these people. So the good news is that Bitcoin mining, unlike gold mining, which requires sifting earth and refining gold and smelting it down, Bitcoin mining is pretty much a synthetic process. All you're really doing is using computational work to search a mathematical space. And because it's synthetic, that means that mining itself can be as green as the energy inputs that the miners are relying on. And so that's pretty good news. It means that as the grid gets more sustainable over time, which we certainly expect it to, mining itself will become greener. And if you expect this transition will occur and renewables will continue to dominate and the grids, generally speaking, will decarbonize, Bitcoin can completely benefit from this. And so in 20 years' time, when grids are green, it could well be the case that Bitcoin has fully sustainable production. The other good piece of news is that Bitcoin is this highly modularizable industry where Bitcoin miners don't necessarily have to be in one place or another, so they can shuttle back and forth and disproportionately procure these sustainable energy sources. So it's you could say it's location independent. Unlike a lot of other industries, Bitcoin consumes energy regardless of where that energy is produced. And of course, this is different from, say, household energy production, where energy has to be produced relatively nearby to load centers because it has losses in transmission. Another historical analogy here would be aluminum smelting. So aluminum can be smelted sort of in a location independent basis. And this is why you had lots of aluminum smelting in places like Iceland with abundant hydro energy. Of course, that required lots of installed infrastructure. So aluminum couldn't perfectly facilitate this energy arbitrage, but Bitcoin can. Bitcoin can be mined with as little as a shipping container full of ASICs. And so it can disproportionately penetrate those places with cheap and abundant electricity. And in many cases, that's renewable. So historically, this is why Bitcoin miners were disproportionately located in China, because China had the most abundant stranded hydro resources on the planet. China was curtailing 50 to 70 terawatt hours of hydro energy, so simply not being delivered to the grid. In 2016, 2017, that's why Bitcoin miners went to those southern provinces in China. So the world doesn't necessarily produce precisely the right amount of energy needed that the grid demands. Oftentimes there's imbalances, and Bitcoin can exploit those imbalances effectively. Wind and solar are a classic example of technologies that don't necessarily generate energy in a way that's suitable for the grid to consume them. You don't necessarily have large suitable solar plants in places that are right adjacent to cities, for instance. And so you see lots and lots of wind and solar curtailment, basically energy that doesn't reach the grid. Now, they don't generate energy in a profile that is suitable for Bitcoin mining today because they're intermittent sources. But as battery technology improves, and I think we can all agree that it is generally improving, they will become smoother in terms of their generation profile and thus more suitable for Bitcoin miners. So that'll be more of a medium-term trend. Lastly, globally speaking, the extraction of hydrocarbons is always associated with the production of waste to natural gas. And that gas effectively gets flared or vented off because it's not economical to make it to the market. Now, Bitcoin miners have begun to take advantage of this flared gas and effectively capture it and turn it into energy to mine Bitcoin with. And now that gas was being flared anyway, so from a carbon perspective, it's completely net neutral. So Bitcoin can take advantage of all of these sources of curtailed, stranded, or non-rival, which is to say energy sources which would not compete with load centers with commercial or household demand for energy. And so this location independence is an incredibly powerful trait for Bitcoin. The other interesting thing is that Bitcoin miners are synergistic with grids that are more renewable in their nature. And this is obviously happening as policymakers prioritize the sustainability of grids. There's just more and more wind and solar that we're seeing part of energy grids. And now an interesting thing about Bitcoin miners is that they represent interruptible load, which means that they can scale down their demand very rapidly and on short notice. So they're perfectly eligible to participate and really suitable for these things called demand response programs, which means that when a grid is very much overtaxed and demand starts to approach or exceed the supply, miners can be part of this industrial cohort that spins down their operations and turns off on short notice. Now, most sources on the supply side of energy cannot spin up or down on short notice. Certainly, thermal energy can't spin up or down. So one way to deal with imbalances in supply and demand is to make the demand side more flexible. And so Bitcoin miners are perfect for that, effectively turning down the demand at times of peak load. And if you look at the Texas demand response program, they asked you to turn off your consumption with 10 minutes or 30 minutes notice. Miners can do this. Other sources of demand have a much harder time doing this. So this actually is a counter-cyclical feature. The miners buy the energy when supply is abundant, and they stop buying the energy when households really need it, when things get extremely constrained on the grid. And so that has this net effect of actually balancing out the grid. And I'm sure we'll see much more of that as more hash rate comes online to the US. The other thing is that Bitcoin miners are a buyer of first resort for new energy projects that aren't yet grid connected. So if you're building a renewable project and it's going to take some time to integrate it into the grid, miners can be a short-term buyer of that energy and effectively improve the financials of that project. So a lot of people say that miners are a subsidy, or Bitcoin is a subsidy for renewable energy. That may or may not be the case, but certainly the presence of Bitcoin miners in a grid, especially one that's rendered more unstable by the presence of renewables, which are more intermittent in their generation profile, the miners can actually attenuate that intermittency and actually enhance grid stability. So the good news, again, is there's been a significant focus on the sustainability of Bitcoin mining, rightfully so, but the Bitcoin mining community has absolutely reacted, and we're seeing rapid progress being made towards sustainability. There's a lot happening here. I'll summarize some of the new elements. So first of all, an enormous amount of Bitcoin's hash rate previously was domiciled in China, but that hash rate was very much exposed to these carbon-intense sources of energy generation, especially in Inner Mongolia and Xinjiang provinces. In certain portions of the year, you'd get 45% of global's entire hash rate being powered by these two provinces, which were 60 to 70% coal-powered in their electricity generation. So during those periods, almost 50% of Bitcoin's hash rate was dominated by these very much coal-powered provinces in China. Now, since May of 2021, China has effectively banned Bitcoin mining in the country. And so around 50 to almost 60% of Bitcoin's hash rate has been eliminated from China. It's looking for new homes overseas. We're still in that period where those miners are looking for new hosting. But what that means is that effective reliance on coal-based generation in China has now been eliminated. And of course, there's coal production in other countries like Iran and Kazakhstan, where we know mining occurs, but a lot of those miners are looking for homes in politically stable countries like the US, where the grids are much more renewable. And so the net effect of this migration from Inner Mongolia, Xinjiang, to places like Texas or the PJM grid in New York, New Jersey, or Canada, British Columbia, or Northern Europe, places where miners are already active, that's going to have the net effect of reducing the carbon intensity of that mining activity. And this was an enormous shakeup in the Bitcoin mining space. So we're seeing this migration happening. We're going to need some more time to see where the miners settle, but most likely this is going to reduce the carbon intensity of the Bitcoin network. Next up, as miners become more Western-based as they undergo this migration, they're also becoming more transparent. And this is a reaction to some of the media attention that we've seen on the industry. And I think it's a warranted reaction. So the Bitcoin Mining Council is just one of a number of initiatives to increased transparency around what miners are doing and where their energy is deriving from. So their first disclosure in Q2 of this year assembled 32% of all of the active hash rate, and they found within that sample a 67% sustainability. And they're making quarterly disclosures on an ongoing basis. So I'm sure that we'll see more of this. I'm very optimistic about the quality of these disclosures. And ultimately, this is just going to provide investors and onlookers and academics and policymakers more information regarding what the miners are actually doing. Of course, we can't solve this problem overnight, but simply providing people the informational tools to understand where these miners are and what their actual energy mix is and what their associated carbon intensity is, that's going to dramatically help here. And some of these miners are actually engaging in the buying of carbon offsets as well. And that's not a perfect solution, but some of them have committed to becoming completely net neutral by pursuing as sustainable sources of energy as they can and buying offsets for the remainder. Now, this is another consequence of miners being public and being exposed to Western capital markets. Increasingly, and we know this is a priority of financial regulators in this country, ESG concerns are a big portion of what these public market agendas involve. So as capital becomes more accountable to Western capital markets, it has a strong incentive to be more sustainable in nature, because increasingly we're seeing the cost of capital rise for firms that fall far outside the norm in terms of sustainability. And so miners now have an additional financial incentive to pursue more sustainable operations. And as miners move from China to the US, that incentive is going to grow. So we know that they're more insensitive these days. And Western miners, we've just seen more disclosure from them and more proactivity from them. So to summarize, this migration of hash rate from east to west is leading to a more accountable, more known, more identifiable, and more sustainable body of miners. And so, of course, it's still early days, and we don't have a complete informational picture regarding the sustainability of the Bitcoin network. But the trends look extremely positive. And at the end of the day, this is an industry that provides a significant value and utility to tens of millions of people worldwide. And so I think the prospects for Bitcoin mining are bright. And I thank you for attending my talk and listening to my presentation.
Hello, I'm Philip Gradwell, the Chief Economist at Chainalysis, and today I'm here to address a major myth around Bitcoin, and that is that it facilitates criminal activity. Bitcoin has a really mysterious aura around it. It's an exciting new technology with an anonymous creator that promises to revolutionize money, and so potentially even society. But part of the mystery also comes from how many people first heard about Bitcoin. The Silk Road, operating between 2011 and 2013, was the first place that people could really use Bitcoin. But the Silk Road was a darknet marketplace, a website where you could buy and sell drugs. So the first time that Bitcoin entered the public consciousness, it was related to criminal activity. And that was my personal journey. And I want to share that journey to dispel the myth that Bitcoin facilitates criminal activity. But first, to just say how you can dispel that myth, there are just 3 facts to remember. The first is that Bitcoin, due to its public blockchain, brings unprecedented transparency to economic activity. The second is that due to that transparency, criminal activity on Bitcoin can be measured. The data shows that illicit entities accounted for just 2% of all economic activity on Bitcoin in 2020, a figure that just cannot be calculated for fiat. So 98% of activity, the vast majority, is legal. And third, Bitcoin's transparency also means that criminal activity can be traced and stopped. To give an example of that, when the US Department of Justice announced the takedown of the largest child pornography darknet market site in October 2019, they said law enforcement was able to trace payments of Bitcoin to the darknet site by following the flow of funds on the blockchain. And it's not just law enforcement. Cryptocurrency businesses around the world perform anti-money laundering checks using blockchain data to meet their regulatory obligations to disrupt criminal activity. Due to its transparency, Bitcoin has good, if not better, ways of combating criminal activity than fiat. So what is the personal journey that has led me to understand that it is a myth that Bitcoin facilitates criminal activity? I'm the Chief Economist at Chainalysis, a company that analyzes blockchain data to promote more financial freedom with less risk. Cryptocurrency businesses, law enforcement, and financial institutions use our software and data to manage the risks of criminal use of Bitcoin, as well as to identify the legitimate opportunities. So when law enforcement were tracing payments to that child pornography site I mentioned, they were using Chainalysis software. But my Bitcoin journey started with the Silk Road, although perhaps not how you might think. I'm an economist, so when I read about the Silk Road on the internet, I was blown away by the way in which Bitcoin was facilitating new types of economic interactions. Now, on the Silk Road, those interactions were illegal, but it demonstrated to me the potential of Bitcoin to transform all of our economic activity. In the years since then, I've been on a mission to accurately understand how Bitcoin is actually used by analyzing data on the blockchain. By 2021, both our ability to understand how Bitcoin is used and the way it is used has been transformed. As this chart shows, the vast majority of Bitcoin activity is currently trading and investment. The chart shows the source on the left-hand side and the destination on the right-hand side of Bitcoin that is transferred on the blockchain over the last 12 months. The largest flows are between self-hosted wallets. These range from Bitcoin sent from the wallet I have on my phone to Bitcoin held by large institutional investors who custody their own Bitcoin. The next largest flows are to, from, and between exchanges, where people trade Bitcoin for fiat currencies or other cryptocurrencies. And as you can see, illicit entities account for a very small amount of the flows compared to these other use cases, small enough that I've had to highlight them on this graph. And what are these illicit entities? They are the Bitcoin addresses that are controlled by people undertaking criminal activities, such as running darknet markets, scams, or ransomware. And I'll describe these further shortly. But first, I want to give you a sense of the overall scale of criminal activity that occurs on Bitcoin. And you can see on this chart that criminal activity accounted for around 2% of all the economic activity on Bitcoin in 2020. And we see some quite large absolute numbers in terms of the dollar value of criminal activity, say sort of $10 billion in 2020. But you've got to understand that these are actually quite small relative to criminal activity in the fiat economy. In fact, in the fiat economy, it's very difficult to understand the level of criminal activity because you can't see the transactions that are occurring and you can't measure it. But there's certainly more than $10 billion of criminal activity occurring. But the level of criminal activity is actually very small relative to the Bitcoin economy. As I showed on the previous chart, there's so much more use cases of Bitcoin going on than just criminal activity. And that is why the overall share of illicit activity on Bitcoin is just 2% in 2020. Now, of course, it was higher in previous years. We see that spike in 2019. And that was actually due to some scams that were particularly successful. I'm going to talk about them more shortly. It's also just important to understand that these numbers are a lower bound and they do change over time. And that's really for two reasons. We identify more criminal activity over time, so that means the numerator gets bigger. And we also remove more noise from our estimates of economic activity on the blockchain. And so the denominator gets smaller. But overall, the key thing to understand is that yes, there is some criminal activity on Bitcoin, but it's a small amount. And as I'll explain later, there are also ways in which it can be stopped. But I also want to talk about the types of criminal activity that does occur. And when we break this down, as we are on this chart here, we see that most of the criminal activity on Bitcoin is related to scams and darknet markets, with an increase in ransomware in 2020. And these are serious crimes, which is why, in my view, for Bitcoin to go mainstream, we need to measure, trace, and stop criminal activity. For example, through law enforcement action, regulation, and anti-money laundering requirements. But another key insight from this is the prevalence of scams. They demonstrate the need for a strong community and some good faith efforts to inform people about the right opportunities. Bitcoin contains so many get-rich-quick true stories that it's so easy for new people entering the space to be sucked in by a scam. So the more that we educate people, the more we can actually tackle this major source of crime. And I believe that the entry of more mainstream organizations that can guide people towards genuine investment opportunities, the smaller this risk of activity there will be. So while there is some serious criminal activity on Bitcoin, it's relatively small and a lot of it is concentrated in scams that can be reduced through greater education and community action. But law enforcement and also cryptocurrency businesses through their anti-money laundering programs are already fighting criminal activity today. And they're actually achieving great success. I'm showing here just a few examples of the law enforcement actions that make it out into the public. And there are many more successful ones happening behind the scenes. And from the perspective we've had at Chainalysis, working with our law enforcement partners, we've really understood that actually enforcing against criminal activity on the blockchain is sometimes actually easier than it is in the fiat world because of the quality of the data and the ability to follow the money without getting stuck in shell companies and jurisdictions that you can't access data on, as you do in the fiat world. Our law enforcement partners have actually managed to do much larger investigations using collaborating with law enforcement agencies across the world at a much greater speed than they would have otherwise been able to do. And another key driver that is controlling the use of Bitcoin for criminal activity is an increasingly strong regulatory framework. People have the misconception that Bitcoin isn't regulated. In fact, because of its early history, its use on the Silk Road, Bitcoin has been under regulatory scrutiny almost from the start. And Bitcoin often falls under traditional existing regulatory frameworks. And over recent years, there's been an enormous amount of effort to build up a more comprehensive regulatory framework specifically for the asset. For example, the Financial Action Task Force, which sets global recommendations for anti-money laundering, has a cryptocurrency framework, and a number of important financial jurisdictions have developed their own cryptocurrency regulations. And so The combination of the transparency of the blockchain, the success of identifying and tracing and stopping criminal activity, and the strong regulatory framework really helps reduce the amount of illicit activity on Bitcoin. And as I've emphasized, there's just a huge amount of data available on the criminal activity and just how it compares to the other far more numerous and positive use cases of Bitcoin. If you want to learn more, at Chainalysis, we have a wealth of information on our blog. But to summarize, really with Bitcoin, you've got to remember whenever someone says, I think it facilitates criminal activity, you should tell them that actually, because the blockchain is public and therefore transparent, we can actually measure the amount of criminal activity that's going on, which you simply cannot do at fiat. And in 2020, it was around 2% of overall economic activity, leaving 98% to more legal, interesting, productive uses. And because of that transparency, it's possible to trace and stop that criminal activity through law enforcement action and anti-money laundering regulations. So thank you very much. I've been Philip Gradwell, Chief Economist at Chainalysis.
My name is Arjun Balaji. I'm an investor at Paradigm, a crypto-focused investment firm in San Francisco. I'm here today to talk about how Bitcoin scales in layers. A common refrain you've probably heard is that Bitcoin is unscalable, or that it can't securely scale to support global finance. If you've spent any time following Bitcoin over the last decade, you've probably heard this discourse in the media. Media stories about Bitcoin often follow a similar structure, a comparison to Visa or PayPal, describing Bitcoin's transaction fees as very high, and the conclusion that Bitcoin can never scale to support global payments. However, the core question of how Bitcoin scales isn't new at all. It's actually one of the oldest questions in Bitcoin discourse. The very first public comment after Satoshi released a Bitcoin white paper in 2010 was from James Donald, aptly describing this constraint. As highlighted below, he said, if hundreds of millions of people are doing transactions, that is a lot of bandwidth. Each must know all, or a substantial part thereof. Put another way, a central tenet of Bitcoin is making sure anyone can easily validate the base layer, and this caps the potential throughput of Bitcoin. The fundamental constraints that exist limit Bitcoin's theoretical transaction throughput between 4 and 7 transactions per second, or TPS. In practice, it's been closer to the lower bound, around 3 transactions per second. It's highlighted on the chart below. This is a far cry from any major payments network like Visa, which claims to hit about 24,000 transactions per second. This is nearly 4 orders of magnitude higher than Bitcoin. These fundamental constraints come from Bitcoin's inherent block weight and interblock times. What this means is that Bitcoin blocks have a limited amount of space to include transactions, and that Bitcoin blocks don't happen continuously. They settle on average every 10 minutes. Oftentimes people ask, well, why can't we just multiply all the constants? This is a major point of friction in the scaling debate. And philosophically, this was the major focus of the blockchain block size wars of 2017 and earlier. This is even seen in Elon Musk's recent attempts to propose scaling Dogecoin to support global payments. The short answer of why we can't multiply the constants is that base layer scalability is a trade-off. A really simple model for this is the scalability trilemma, which you can see here, with 3 prongs: scalable, secure, and decentralized. Any simple scaling solution will find it really challenging or impossible to optimize for more than 2 out of 3 of decentralization, scalability, and security. One mental model of Bitcoin is that it's a train, which has limited seats and departs at limited times. In order to get a seat on the train, users have to bid for a ticket. That's the Bitcoin fee market. We could decide to make each carriage on the train 10 times bigger, but this comes at a cost. In this case, the cost is all imposed on users who want to run a full node. This directly trades off the decentralization leg of the trilemma. Today, Bitcoin's weight is already over 350 gigabytes and rapidly growing every year. Though hardware improves and storage costs drop over time, making blocks 10 times bigger would likely make it prohibitive for ordinary users to use Bitcoin without trusting an intermediary. The key takeaway is that one does not simply scale Bitcoin by multiplying the constants. So what is the right way to think about Bitcoin scaling? One model is that Bitcoin's base layer is a settlement network and that it should be scaled like an onion in different layers. This isn't unique to Bitcoin by any means. Virtually all payment networks scale in layers, with the possible exception of physical cash, the bearer instrument. For example, credit card transactions from payment networks like Visa are intermediated by many, many different systems, including banks, payment processors, networks like Fedwire or ACH, and they ultimately settle weeks or months after the point of an exchange. So how is Bitcoin scaling today? Categorically, I think there are 3 big buckets to consider. The first is layer 2, primarily focused on Lightning. L2 solutions scale settlement assurances of the Bitcoin base layer with deferred settlement. This means that balances are ultimately settled on the base layer, but not necessarily at the point of a transaction. The second categorical approach is sidechain, which was conceptually proposed by Blockstream several years ago in 2014. Sidechain scale settlement assurances by pegging Bitcoin onto another chain, which can maintain an independent security model of the Bitcoin blockchain. Sidechains come in all flavors, including federated chains, which rely on a trusted validator set, more trust minimized models, which allow Bitcoin to be able to be used on other permissionless layer 1 blockchains, like Ethereum. The third approach is scaling Bitcoin off-chain through Bitcoin banks. Today, there are hundreds of Bitcoin exchanges globally, which all help scale settlement assurances using financial intermediaries. The critical link between all 3 classes of scaling solution is that they allow users to make trade-offs in the settlement assurances they get from Bitcoin. For example, a large institution making a Bitcoin transfer may naturally transact on layer 1. An application requiring a lot of microtransactions might be hosted on layer 2 and so on. To dig into the first solution, layer 2 systems like Lightning scale Bitcoin payments with deferred settlement. What is deferred settlement? Deferred settlement is really simple. It's like maintaining a tab at a bar. Like going to a bar, opening up a tab, and then settling at the end of the night, Lightning lets you open up a payment channel with a counterparty by setting up a funding transaction through multisig at the base layer. When you leave your credit card with the bartender, you're effectively opening up a payment channel, just like in Lightning. The bartender updates the state of the channel after every beer you order. At the time that you hand your bartender the card, your beers are effectively paid for, even if you forget your card. The bartender can always settle at the end of the night and probably leave themselves a nice tip in the process. Similarly, Lightning allows users to independently settle to the base layer of Bitcoin blockchain anytime that they have a dispute, just like they would if they had an issue with a credit card company. The Lightning network itself is a mesh composed of many different payment channels. As long as you have a payment channel that's actively funded, it can interface with any other payment channel without requiring you to go back to the Bitcoin blockchain. Most importantly, Lightning's security is proximate to the Bitcoin base layer. Counterparties are always able to settle back to the Bitcoin blockchain in the case of a dispute. There's about 1,800 Bitcoin observable on Lightning today, and the Lightning Network has steadily grown capacity over the last few years in Bitcoin terms. This represents about $50 million US in liquidity today. Lightning is also useful because it enables the native programmability of Bitcoin, and it extends the Bitcoin script that's available on the base layer. This is particularly useful for applications that require high transaction throughput. Applications like Sphinx Chat, which are enabled by Lightning, and do valuable work on Lightning developer SDKs, which are supported by Square and many other ecosystem participants. Moving to the next model of layered blockchain scaling, sidechains can help scale the Bitcoin base layer by pegging Bitcoin onto an independently secured chain. One of the most notable sidechain designs is Liquid. Liquid uses a federated security model and can be used to settle faster Bitcoin transactions between businesses. Liquid runs on a two-way peg, moving Bitcoin between the Bitcoin blockchain and the Liquid sidechain at a one-to-one rate. In Liquid, a group of trusted validators rather than miners receive transactions and broadcast ballot blocks. Since Liquid is primarily used to transfer Bitcoin between businesses, validators are mostly major crypto exchanges and trading firms, although anyone can use Liquid. Since Liquid relies on a trusted federation for security, block times and confirmation thresholds can be different than on the Bitcoin blockchain. On the main Bitcoin blockchain, blocks come out every 10 minutes. However, on Liquid, they're produced every 1 minute. Generally, most exchanges require 6 or more confirmations on the Bitcoin blockchain. However, transactions are generally considered confirmed after only a couple of ballot blocks on Liquid. This is all effectively social consensus that users can converge on based on the trade-offs that they've considered and the settlement assurances that they consider important. In Liquid, these settlement assurances can be different because of the validators that are participating in the system and the fact that most of them are trusted intermediaries already. As seen below, the Liquid Federation has many members, including many global exchanges. Another system being used to scale Bitcoin payments and usage today is Ethereum, the second largest permissionless blockchain. Today, over 255,000 Bitcoin, or about 1.2% of the fully diluted Bitcoin supply, $8 billion worth, is tokenized on Ethereum. There are many different versions of tokenized Bitcoin on Ethereum. The most popular is WBTC, custodial Bitcoin peg, operated by a trusted group of depository institutions, primarily large global exchanges like BitGo or Coinbase. WBTC can be issued on Ethereum first by depositing Bitcoin with a custodian, who then gives you an ERC20, which can then be used on Ethereum, as illustrated in the diagram below. Once the Bitcoin is tokenized on Ethereum, it can be used pretty much anywhere. An ERC20 token can be used. In the case of WBTC, it's often used in decentralized applications in Ethereum, such as the money market compound, as seen below. Over $1 billion of WBTC is currently supplied in Compound and earning yield. You can imagine that Bitcoin can be used in other applications such as decentralized exchanges, decentralized financial products, and even Bitcoin margin derivatives, all powered by sidechains. In addition to scaling Bitcoin through on-chain layers like Liquid or Lightning and sidechains like Ethereum, financial institutions play a really major role in scaling the usage of Bitcoin. While the idea of using banks to scale Bitcoin might seem counterintuitive and perhaps counter to the cypherpunk ethos that Bitcoin had to begin with, from the very beginning, Bitcoin was built with the idea that it can serve as a base layer for reserve currency that can then be used by banks to scale. As Halfpenny pointed out as early as 2010, it's possible that in the future, most Bitcoin transactions occur between banks, and that base layer Bitcoin transactions are executed by individuals are exceedingly rare. As Hal put it in this post, it might be as rare as buying Bitcoin in 2010. Today, about 8% of Bitcoin is held by exchanges. This is likely a lower bound, so it does appear that Hal was somewhat prophetic. There are many different protocols, such as proof of reserve, which can preserve Bitcoin's base layer guarantees. Proof of reserve allows exchanges to prove attestations of the Bitcoin that's held, so that we're not reliant on some of the issues that a fractional reserve bank might have or present in the rehypothecation of Bitcoin. To conclude, The thesis that many present is that Bitcoin's base layer is unscalable. As we've seen, this is false. The antithesis that many present is that Bitcoin's base layer scales limitlessly. As we've seen, this is also false. It presents many issues, including raising the cost of validating a full node. In fact, the synthesis is that Bitcoin settlement assurances can securely scale in layers, that users that wish to pay higher transaction fees or deal with longer confirmation times, etc., can use the base layer Bitcoin blockchain. This might be used for high value transactions. Users that need, or applications that need or rely on microtransactions can transact on layer 2, such as Lightning. Still, more trusted applications, which might require even more transaction throughput, or even new applications such as credit, can use sidechains like Ethereum or Liquid. And that presents a different set of settlement assurances and trade-offs that users can accept. And still, most users may end up transacting in Bitcoin through off-chain banks or off-chain solutions like Coinbase or BlockFi, or many of the large Bitcoin banks that exist today. Thank you.
Hi, my name is Maddrey. I'm a senior research analyst at Coinmetrics, and today I'm going to be talking about Bitcoin ownership concentration and some of the myths surrounding it. So Bitcoin supply is sometimes reported as being concentrated or controlled by whales, but how concentrated is it really, and how can we measure it? So here are two real headlines. The first one reads, over 99% of the current Bitcoin supply is held by only 10% of Bitcoin addresses. The second reads, Bitcoin whales ownership concentration is rising during rally. And this is an excerpt from that second article. A few large holders, commonly referred to as whales, continue to own most Bitcoin. About 2% of the anonymous ownership accounts that can be tracked on the cryptocurrency's blockchain control 95% of the digital asset. Now, while this is technically true, it is true that 99% of Bitcoin supply is held in 10% of Bitcoin addresses. This is misleading because it's implying that the supply is controlled by individuals or a few large holders, while in reality, this is not necessarily the case. And I'm going to go into much more details about why exactly this is misleading. But first, I think it's important to understand how we measure Bitcoin supply and how we measure Bitcoin supply concentration. So Bitcoin supply data is completely public and verifiable. Bitcoin is a pretty unprecedented financial data set in this sense, because every single Bitcoin transaction since its inception has been publicly recorded on the Bitcoin blockchain. Furthermore, anyone can run their own Bitcoin node, which is really just a piece of free open source software, to view and verify the complete transaction history of Bitcoin. And that's a lot of what we do at Coinmetrics. We run our own Bitcoin nodes and other cryptocurrency nodes, so we can verify the entire transaction history. Now, in the context of kind of traditional banking and traditional financial transactions, this is pretty unheard of. Traditional banking transactions are inherently private, while Bitcoin's entire history is completely public. So in addition to be able to verify the supply, this also lets us be able to create metrics on top of the supply and kind of get a deeper analysis of exactly what's going on. You can see in this image here some of the data that's included with and viewable with Bitcoin transactions. Each transaction has its own unique ID, which is called a hash. You can see exactly how much Bitcoin is sent in each transaction, and you can see which addresses it's sent to. So building off of that transparent supply data lets us compute metrics like this. And this are some of the metrics that were cited in the original article. So first here, we're seeing that the blue line on the top of this chart shows Bitcoin's total current supply. And we see it's increased over time. We can track it to a very precise degree. We also see this green line here, which shows the amount of Bitcoin supply held in the top 10% of addresses. And then the red line is the amount of supply held in the top 1% of addresses. So at first glance, this does look like supply is heavily concentrated, as those articles were implying. But there's a really important caveat here, and that's that this is showing the amount of Bitcoin supply controlled by the top 10% of addresses and not necessarily the top 10% of individuals. So a Bitcoin address isn't necessarily an individual. And this is a common misconception with Bitcoin and crypto addresses in general. An address can represent many individuals, and an individual can also own many addresses. So for example, exchanges, institutions, multi-sig wallets may have a few addresses that are holding Bitcoin for hundreds or sometimes even thousands of people. On the other end of the spectrum, an individual can own many addresses, and individual investors often will hold many different Bitcoin addresses for privacy or security purposes. Also, when a Bitcoin transaction is sent, a change address is needed. And this can sometimes make it seem like there's more than one individual, while it's really just an individual who controls all of these addresses. So this shows the amount of Bitcoin held on exchanges. And this shows most of the major crypto exchanges. It does not show all of them. There are a bunch more as well. So if anything, this is probably even underestimating the amount of Bitcoin held on exchanges. But you can see here there's at least 1.6 million Bitcoin held on exchanges, which is about 9% of total supply, and it's increased over time. 5 out of the 10 largest Bitcoin addresses belong to exchanges, including the top 2 largest addresses. The largest Bitcoin address is owned by Binance, who holds about 300,000 Bitcoin in a single address. And though if you're looking on chain, it may appear like these addresses are whales or large holders who are controlling a huge amount of Bitcoin, in reality, that's not the case. These exchanges are holding Bitcoin on behalf typically of thousands of customers, and each individual customer can choose when to deposit or withdraw their Bitcoin from that address. In addition to exchanges, a lot of large Bitcoin addresses are controlled by what we commonly refer to as dormant OGs. So in Bitcoin's early history, very early history, it was still an experimental network, and a lot of its earliest users amassed a large amount of Bitcoin and then either lost their keys or abandoned those addresses. And we can see 2 examples of that here. So the first address on the right here is a Bitcoin address that controls about $1 billion worth of Bitcoin. It's the 26th largest address in the Bitcoin network. But that address that's holding $1 billion has not had any transfers out since 2010. The most famous example of these kind of dormant OG addresses is Satoshi Nakamoto, who of course founded Bitcoin. And Satoshi is believed to own over 1 million Bitcoin split across various addresses. And all of that Bitcoin has not been moved after it was originally mined. So when we're thinking Bitcoin supply and we're calculating a lot of our metrics, we typically consider this type of supply to be lost. And we exclude it from free float supply, which is basically the amount of liquid Bitcoin supply that's available. Since this $1 billion or these huge amounts of Bitcoins haven't moved, a lot of these keys have probably been lost, misplaced, and a Bitcoin key is lost. There's really no way to retrieve it, so that supply essentially is gone forever. So this is another example of large addresses in the top 10%, which at first glance could seem like huge whales, but in reality, a lot of this Bitcoin probably isn't even active anymore. Lastly, investment products. So a lot of Bitcoin is increasingly being held in investment products. Grayscale is the biggest example. Grayscale's Bitcoin Trust holds about 650,000 Bitcoin, close to 3.5% of supply. Other ETFs hold over 1% of Bitcoin supply. And there's an increasing amount of wrapped Bitcoin, WBTC, which is basically a synthetic wrapper for Bitcoin that lets Bitcoin be used on the Ethereum blockchain. So these, again, are all examples of products that might control a small group of addresses that have a large amount of Bitcoin that look like whales, but really this Bitcoin is controlled by hundreds or thousands of other investors. On the other end of the spectrum, there are a ton of pretty small Bitcoin addresses. So out of the 38 million Bitcoin addresses that hold a balance, about 5.8 million hold less than $1 worth of Bitcoin. And a lot of these small addresses also don't represent individuals. They're either tiny addresses that have been abandoned, or they're addresses where a single individual will own a bunch of these smaller addresses. There are over 855,000 dust addresses on Bitcoin, and a dust address is an address that's holding such a small amount of Bitcoin that it's not even really worth transferring it out of that address, because the transaction fee would be too high to make it worth it. So these smaller addresses further kind of skew this data, because there's so many of these tiny addresses that also do not represent individuals, but it makes it look like supply is concentrated at the top, when really, again, these addresses aren't individuals at all. So it can be tempting to compare Bitcoin supply distribution to US wealth distribution or another fiat currency's wealth distribution. We've all seen this chart or something similar. This shows the US wealth distribution, which of course is pretty heavily weighted towards the top 1%. But this is really not a like-to-like comparison, since these wealth distributions are showing the wealth distribution of individuals. And like I just went over, Bitcoin supply distribution is showing that distribution of addresses and not individuals. Instead, it's better to understand how Bitcoin's unique supply issuance works and unique supply distribution method works, and then compare it to other cryptocurrencies. So Bitcoin was designed to have fair, transparent supply issuance. And here's how Bitcoin supply issuance works. So every time a Bitcoin block is successfully mined, the miner who won the block earns newly issued Bitcoin as a reward. And at Bitcoin's inception, this block reward started off at 50 Bitcoin per block, which is a lot. And then every 4 years since then, it's been cut in half. That reward's been cut in half, and we see that here in this chart. So it started off at 50, then got cut to 25, etc. And that halving process will keep on occurring until Bitcoin's maximum supply of 21 million is eventually reached. Now, this supply issuance method is really important because it's how Bitcoin supply gets out in the first place. It's how it's distributed, but it's also really key for securing the network. So this block reward is the main part of what incentivizes miners to contribute energy and contribute hash rate to the network, which is ultimately what secures the Bitcoin network and keeps Bitcoin safe. It's also important to note that all of Bitcoin supply has been released this way. It's all been issued through block rewards, which is not the case for every cryptocurrency. And in fact, most other cryptocurrencies do not have their entire supply released this way. They have other initial methods of releasing their supply. So that's how Bitcoin supply is initially issued. But after it's given to these miners, how does it get distributed to other holders? So Bitcoin miners, like I said, earn their revenue in Bitcoin. Most of their revenue comes from these block rewards. They also earn transaction fees. Every time a Bitcoin transaction is sent, the sender needs to pay a fee in Bitcoin, and those fees also go to the miners. So these miners are earning all of their revenue in Bitcoin, but most of their expenses still need to be paid out in their local fiat currency. That might eventually change. They might eventually be able to pay in Bitcoin or another cryptocurrency. But today, they still mostly need to pay their expenses in fiat. And expenses are things like electricity, hardware, rent, and these things aren't typically accepting Bitcoin as payment yet. So because of this helps naturally distribute Bitcoin supply. If the miners want to remain profitable over the long term, they're going to have to eventually sell some of their Bitcoin. Different miners have different methods and strategies for doing this. Some just sell Bitcoin at predetermined intervals, and some hold it for longer. But again, if they want to remain profitable, they're going to have to sell some of this Bitcoin. And here, this chart is a really interesting example of that phenomenon and that distribution method. So what this is showing here is the purple. So this is the percent of total Bitcoin supply held by different groups of addresses, where each address is holding a different amount of Bitcoin. And I'll explain exactly what that means. So this purple area here shows the total percent of Bitcoin held by addresses that are each individually holding between 10 and 100 Bitcoins. So in Bitcoin's very early years, kind of 2009, 2010, we can see that pretty much 100% of supply was held in these addresses that each individually held between 10 and 100 Bitcoin. That changed over time. But the reason for that is because, as I just explained, the initial block rewards were 50 Bitcoins. So when these early miners got their 50 Bitcoin, most of them just let it sit there in an address. They didn't really transfer it. They didn't necessarily collect more. There wasn't too much you could really do with Bitcoin in the early days, and a lot of them were still kind of viewing Bitcoin as an experiment. So most of the addresses were holding 50 or 100 Bitcoin in that range. We didn't really see that change until July 2010, when something pretty interesting happened. So in July 2010, we see this blue area of the chart start to emerge. And the blue area represents the amount of supply held in addresses that are each holding between 1 and 10 Bitcoin. So before that point, there were basically no addresses that were holding less than 10 Bitcoin, which is pretty crazy. But we see this blue area emerge. More Bitcoin supply is held in these smaller addresses that each hold between 1 and 10. And then a little later, we see the yellow area emerge, which is the amount of supply held in addresses each holding between 0 and 1 Bitcoin. So what's happening here is that in July 2010 was when the first Bitcoin exchange came online, the infamous Mt. Gox, which later got hacked and is no longer online. But basically what ended up happening is these early miners started selling some of their Bitcoin when the exchange came online. And that helped naturally start distributing Bitcoin to these smaller holders. So we're seeing this distribution play out in real time in this chart. It is important to note that this is on a log scale, just so we can really see it. It makes it look a little more extreme than it was, still only kind of like less than 2% or so of total supply was held by these small addresses. But still, this is showing how this distribution method started. So this is a similar chart, but zoomed out over a longer time period, and it's on a linear scale instead of log. But we're seeing a similar pattern here. So the dark blue area is the amount of total Bitcoin held in addresses that are each holding between 10 and 100 Bitcoin. Same thing, those addresses in the early days controlled all of Bitcoin. But then over time, that Bitcoin started getting more and more distributed to smaller addresses, as well as concentrated to some larger addresses. So the pink area at the top is showing addresses that each hold at least 10,000 Bitcoin, the total amount of Bitcoin held by those addresses, which there are very few of. Then the lighter blue area is the amount of Bitcoin held in addresses that are holding between 1,000 to 10,000 Bitcoin. And again, it might look like these large addresses are holding a relatively large amount of supply, but a lot of these addresses, especially the very large ones, are exchanges or other institutions which are holding Bitcoin on behalf of others. So this is another way of viewing Bitcoin supply distribution. And instead of grouping it by addresses that are holding an absolute amount of Bitcoin, this is showing it grouped by addresses that are holding a certain percent of Bitcoin supply. So the blue area on the top, in this case, is showing addresses that each individually hold at least 0.1% of Bitcoin's total supply. which is a very large amount. So those are very large addresses. Ranging all the way down to the bottom, it's showing the amount of Bitcoin held by small addresses, held by addresses each holding less than 1/100 millionth of supply. So the reason I'm showing it this way as opposed to the last one is just because this is going to make it a little easier to compare Bitcoin supply distribution to other cryptos. But we can see here that by this grouping as well, Bitcoin supply is actually fairly well distributed amongst these different address sizes. So here's the distribution of Ethereum's native token, Ether. And we can see that comparatively a larger percent of ETH supply is held by the largest addresses at the top. So similar thing, the dark blue area at the top is showing the amount of ETH held in addresses that each individually hold at least 0.1% of supply. And compared to Bitcoin, Ethereum had a little bit of a different initial supply issuance method. Ethereum had an initial public sale where people could buy ETH, which is different from Bitcoin, where it was all issued to early miners. And we see that play out in this chart. If you look at the left-hand side of the chart, Ethereum started pretty heavily concentrated. It's gotten less concentrated over time, but the initial distribution method and distribution patterns look different from Bitcoin's chart, which we just saw. It is important to note, though, that similar to Bitcoin, Ethereum has many addresses like exchanges that hold ETH on behalf of others. It also has a lot of smart contracts like the Ethereum 2.0 smart deposit smart contract that are holding large amounts of ETH on behalf of individual investors. DeFi smart contracts are doing something similar. DeFi lending protocols are holding ETH in smart contracts, which is controlled by a bunch of individual investors. So that same caveat definitely applies for Ethereum. And this is Dogecoin's distribution. Dogecoin is even more heavily concentrated than ETH. There's actually a single Doge address that controls about 28% of total supply, which is pretty crazy because, for context, the largest Bitcoin address, which belongs to Binance, controls about 1.6% of total supply. And again, the Doge address controls 28% of total supply. Unlike Bitcoin and Ethereum, however, the owner of this large Doge address is not really publicly known. We can also see that Doge's supply has been getting more concentrated over time. More and more Doge has been going to these really large addresses. This metric is network distribution factor, aka NDF, which is a way to compare Bitcoin's or crypto's supply distributions a little more directly. The way that this is calculated is it's by taking a ratio of supply held by large addresses over the total supply of that crypto. So it's basically the aggregate supply held in addresses which each individually hold at least 0.0001% of supply divided by the total supply. So a low NDF indicates a relatively distributed supply. Bitcoin has a relatively low NDF of about 0.35. Bitcoin is all the way at the bottom. It's the red line there. And then we can see Ethereum or Ether, which is the kind of darkish green line in the middle, is in the middle here. Doge is orange, a little above it, so it's a little more concentrated than ETH. But then there are also cryptos that are above Doge. So at the very top, we see XLM, which is Stellar, and XRP, which are Ripple. Both of these had pre-mines or pre-sales. And they also have foundations that hold a large amount of their crypto assets. We see a couple of stable coins here. The yellow line is USDC. The kind of purplish line, purple-pink, is Tether, the Ethereum version of Tether, both of which started off almost completely concentrated and have been getting more distributed over time with natural usage. And then at the very bottom of the chart, we can see an orangish line forking off of Bitcoin, and that's Bitcoin Cash. That one's interesting because Bitcoin Cash literally forked from Bitcoin in 2017. And when it forked, the supply concentration was exactly the same. But over time, Bitcoin Cash has been getting more and more concentrated. There's also a line that forks out Bitcoin Cash, which is Bitcoin SV. It's a little less concentrated than Bitcoin Cash, but it's still more concentrated than Bitcoin, which again just shows the importance of that initial supply distribution method, and also just speaks to Bitcoin's decentralization in general. So over time, more and more Bitcoin has been getting distributed to addresses holding small yet significant amounts. This chart shows the total amount of supply held by addresses with 0 to 1 Bitcoin. Addresses holding less than 1 Bitcoin now collectively hold almost 1 million Bitcoin. And addresses with between 0.01 and 1 Bitcoin now collectively hold about 740,000 Bitcoin, and that's the red area on this chart. So, and again, going back to the beginning of the chart and beginning of Bitcoin, we can see there were basically no addresses holding less than 1 Bitcoin. So it's pretty remarkable how distributed this has gotten over time, and it's continuing to get distributed today. So in conclusion, despite misleading headlines, Bitcoin has a unique fair issuance mechanism, which has led to supply getting more distributed over time. And with the growth of Bitcoin payment mechanisms and services like Square, with the introduction of Bitcoin as legal tender in El Salvador, it will undoubtedly only continue to get more distributed as time goes on. If you'd like to explore the data used in this presentation, please check out charts.coinmetrics.io. You can check it out for free and download a lot of this data. And that's it. Thank you very much. If you have any questions, please feel to reach out on Twitter at Coinmetrics or at Nate Maddrey. Thank you.
Hello, I'm Lynn Alden of Lynn Alden Investment Strategy, a firm that focuses on providing market research for institutional and retail investors about a variety of different asset classes, including digital assets. And today I'm going to talk about the misconception that Bitcoin is easy to displace. That basically the probability that another blockchain could come along and be superior to Bitcoin in most or all metrics. And so let's dive right in. So if we take a step back, basically, when we talk about the success of cryptocurrency, it's reliant in very many ways on the network effect, which is also how protocols and social media platforms and a variety of other things derive their value. And so when it comes to blockchains, the stronger the network effect, the better the security and development enjoys, resulting in an entrenched advantage that gives it an almost insurmountable gap compared to competition. And so when we look at the history of Bitcoin, it's gone through basically 4 cycles of growth. And so far, those have correlated. People can debate how causation plays here, but they've been rather correlated to Bitcoin's halving cycle. And so every 4 years, Bitcoin is pre-programmed to change the number of new coins that are generated every 10 minutes. And so during the course of its almost 13-year history, it's gone through this period where every 4 years there's a smaller number of coins generated. But when that happens, when that kind of that difficulty, that new coin generation kicks in, that generally results in basically a supply shock, you could say. Basically, the market had already settled on a certain supply-demand balance, and when that new supply gets cut in half, that has historically led to, or at least been correlated with, a price increase, and that has often resulted in periodic bubbles that capture media attention. Then there's a correction. Bitcoin frequently has been labeled dead, but then it recovers and continues on going forward. And so it's been rather volatile. But when we zoom out and look at this logarithmic view of the price, it's actually been the steady state of increases. And of course, the big question is, how long will this continue? Will this reach a certain plateau of multi-trillion-dollar asset and go up from there? Or will this eventually roll over and be surpassed by either some other technology, or will the whole space just no longer be effective? And most signs point to that the network effect continues to be extremely strong, and we're going to walk through some of the steps here. And so overall, Bitcoin's irreplaceable attributes largely rest on three different categories. So there's security, scale, and decentralization. And so they all play into each other as well. So security can help increase its scale can help increase its security. But basically, when we analyze the qualities of the network, we can go through these three areas. And so, for example, in terms of security, Bitcoin's hash rate and simple base layer give it more assurances as a way to store value or transmit value than every other blockchain. When we look at scale, of course, Bitcoin's the largest protocol by market capitalization. It's also one of the largest protocols in terms of development network and how much value is transmitted in any given period of time. And then in terms of decentralization, basically there's more of a division of powers in the Bitcoin network compared to most other cryptocurrencies, even ones that are also pretty big on terms of scale. And so the next few slides will dive into these three individually with more detail. So if you focus on security, when it comes to a proof of work protocol, scale is a very big factor. And so what this chart on the right shows is Bitcoin's hash rate. So it's a rough measure of how much processing power is used to secure the network. Compared to some of its copies, like Bitcoin Cash and Bitcoin Satoshi Vision, that have they've taken the blockchain, they've forked off, they've made their own changes. And so what we see is that Bitcoin has orders of magnitude more security than those other offshoots. And analogy that I've seen used, for example, is that almost anyone could copy and host Wikipedia, right? So Wikipedia is not that much data. You could copy it, you could put it on your own website. But what is the chance that you'd be able to actually get the traffic that Wikipedia has? And the chance, of course, is almost zero, because even though you could replicate, the current state of Wikipedia, you'd be unable to replicate the millions and millions of links around the world pointing to Wikipedia. You'd be unable to, capture a large percentage of the user base that continually updates Wikipedia to instead go and update your version, right? So basically, Wikipedia's network effect is so entrenched that merely copying it is insufficient to become an actual competitor to Wikipedia. And so the same applies to blockchains. You can copy a blockchain, you can make your own blockchain, but unless you reach that critical mass of millions and millions of users with a well-designed protocol and appropriate decentralization and high levels of security, the blockchain is not going to be effective. And so there's only a couple blockchains that have really kind of reached that critical mass, and among them, Bitcoin has very unique characteristics. And so there's a variety of reasons that basically Bitcoin is more secure than its competing protocols. And so the fact that it uses dedicated ASICs, for example, in its mining algorithm, means that not only do you have to pay for electricity in order to mine Bitcoin, you also need to actually acquire dedicated hardware. So unlike a GPU-based blockchain, you can't merely rent, say, cloud GPUs to attack the blockchain. You'd actually need to somehow acquire the majority of the over 51% of the dedicated mining hardware. And so overall, Bitcoin has had 13 years almost of uninterrupted uptime. And that's in large part based on the fact that it has a tighter and larger security network than every other blockchain out there. And what's often called a bug is actually a feature, is the fact that Bitcoin is very simple, right? So many other blockchains try to do more on the base layer, whereas Bitcoin is purposely very simple on the base layer. That gives it fewer attack surfaces, that gives it fewer risks for bugs or unknown outcomes, of different types of transactions. It's basically a very simple base layer, and then any additional complexity that the ecosystem might want can be built on top of it in additional layers or side chains, or there can be other blockchains for other purposes. But basically, Bitcoin itself is designed to do a small number of things very, very well. And for 13 years, that's what it's done. And so generally, when you hear about a blockchain that offers more capability on the base layer, or that has more transaction throughput, or whatever the case may be, it's always important to ask yourself, what are the trade-offs that that blockchain is making? Because you have to realize that Bitcoin, the limitations that it has are there for a reason. Those are a specific set of design choices to maximize certain areas over other areas. And so whenever those variables are tweaked by another blockchain, they're sacrificing some aspects generally related to security or decentralization in order to achieve more capability on the base layer. So next we'll take a look at scale. And so, of course, Bitcoin has the largest market capitalization with estimated to be well over 100 million users at this point. And that includes on-chain users as well as users on exchanges or other providers. And so if that number is correct, and many estimates have pointed in that direction, that means Bitcoin has so far reached a higher level of adoption than the internet did by this point in its life cycle. And so it's being adopted very quickly. It's the fastest asset to touch $1 trillion market capitalization. And then, when you include not only the base layer, but also additional layers like Lightning and Liquid, as well as various side chains or other things in the ecosystem, and then all the variety of apps and hardware devices that are either Bitcoin specific or Bitcoin first, kind of focused on Bitcoin. It has, one of the largest overall networks in the blockchain space. And again, the more development that goes on, the better and better the system gets, and the bigger that gap becomes compared to the other blockchains in the ecosystem. And so when we look at, for example, hardware wallets, so there's many hardware wallets that accept multiple different coins, but then there are also hardware wallets that are Bitcoin only, that only work with Bitcoin by design to enhance their security and be more specialized. And so what that ultimately means is that, for example, Bitcoin has a greater range of hardware selection than other coins in the space. And that also applies to there's a variety of apps that only work with Bitcoin. And so in many ways, Bitcoin's ecosystem overlaps with the broader crypto space, but also has a very own dedicated Bitcoin-focused part of its ecosystem. And so when you include all these different layers, Bitcoin's development network is very, very big. And an analogy I like to use that other great researchers in the space have used is that it's more like a protocol than anything else. And so, often people ask themselves, okay, when is Bitcoin going to be replaced by a better competitor? It operates in technology, and so naturally we have to look to see what's going to be better. Now, however, when you look at protocols in the technology realm, protocols tend to be very, very long lasting. And that's because they achieve a certain critical mass that, that acceptance is what makes them valuable. And so an example is TCP/IP. As I speak right now, I mean, that protocol is between 4 and 5 decades old, and it's still the backbone of the internet. And 20 years from now, it'll still be the backbone of the internet. And of course, the internet over time changes very rapidly, but that underlying foundation for how it works is actually rather static and rather consistent. And so Bitcoin, in many ways, is adopting that approach, where the base layer is this, purposely simple, robust platform for storing and transmitting value. And then all these other complexities can be added to it on top of it or alongside of it in different ways. But that underlying foundation doesn't have to, nor should it, change rapidly. Another example would be, for example, USB. And so USB at this point is almost 25 years old, and it's gone through 3 major upgrades over that time that are generally backwards compatible or can be made backwards compatible with the prior versions to get faster over time. And so, for example, if you were to come along and say, I made a better TCP/IP, basically a better way to run the internet, or I've made a slightly better USB, you have to ask yourself, what is the chance that your protocol could catch on when those other protocols already have billions of users? And so at that point, they're not even competing purely on technology. They're competing on the fact that they're already so widely accepted that it's very, very hard to displace them as long as they continue to be a good foundation for updating over time, which again is what Bitcoin has become. So lastly, we can focus on decentralization. And this is where, for example, it's useful to compare, say, Bitcoin and Ethereum, because Ethereum is the other blockchain in the space that does have a very large market capitalization and development network as well. So that's the other blockchain that has a large network effect. But that's where that similarity ends, because they actually have very different qualities in many other areas. And one of them is decentralization. So on the right here, we see for Bitcoin and Ethereum as examples, we see how much total supply they have, and then also how much new supply is issued per year. And so with the chart of Bitcoin on top, for example, we see that its supply and its issuance rate is very algorithmic. So from inception, it had a certain pattern that it was going to do, and it's done that perfectly since inception. And that's because it would take almost unanimous consensus by the Bitcoin community in order to change that outcome, right? So you need node operators, you would need miners, and developers to basically all conspire to change Bitcoin's monetary policy. Whereas Ethereum, when we look at Ethereum at the bottom there, so Ethereum has a different design philosophy. So they use, for example, difficulty bombs on the blockchain in order to basically force a quicker update path than, say, Bitcoin has. And so what that essentially does is it gives the developers more influence over that network than developers have over the Bitcoin network. And so, for example, Ethereum's issuance rate has been more variable. The monetary policy is prone to changes. And depending on how you look at it, that could be considered a feature or a bug. Obviously, people in the community have different ways of looking at that. But the point is, those are two very different design philosophies. So one has been more prone to change, whereas one is more prone to basically, you have a very high probability of being able to understand Bitcoin's monetary policy looking out 5 or 10 years compared to a protocol like Ethereum. And so, when we look at this, when you look at a competing blockchain, whether it's Ethereum, whether it's one of the other protocols out there, you have to ask yourself, between the nodes, the miners, and the developers, who has the primary amount of control. And so, for example, in Bitcoin, because nodes by design are easy for someone with a basic computer and a basic internet connection to run, that means there's a very, very large number of people that store the full node, and that therefore, if miners conspire to change something about the blockchain, their ability to get past that full node network is limited, right? So the nodes essentially have a large degree of power in that network. Whereas when you look at other systems, other blockchains that, they make their base layer far more complex, it makes it very, very hard for users to run their own full node. And so that, basically centralizes power more in the hands of the miners or the developers. And it becomes a more company-like system rather than a protocol, a decentralized protocol. And so when we think about different types of blockchains, it's important to always be aware of the trade-offs and understand that part of what has made Bitcoin successful is that by keeping the base layer simple, by keeping the nodes small and easy to operate, it has achieved a level of decentralization that is very, very hard for other blockchains to replicate. Because all the features that they're adding are also adding complexity to that process of running your own full node. And so basically to summarize, we can compare Bitcoin to MySpace, because that's an often way of thinking about it among investors that are maybe cautious about wondering if Bitcoin is going to be displaced or not. And so MySpace, of course, is a well-known example of a social media network. It launched shortly before Facebook, but was eventually surpassed by Facebook, a later competitor. But there are some differences to be aware of. And so, for example, Bitcoin reached a $1 trillion market capitalization and continues to be the leading cryptocurrency almost 13 years into its existence, whereas MySpace reached a peak market capitalization of about 12 billion 5 years into its existence and then was surpassed, and it quickly fell in market capitalization. And so, Bitcoin has already reached a level of scale and basically market dominance that is very different than MySpace reached, and for a longer period of time. Another difference is that Bitcoin came after BitGold, Hashcash, and B-Money. So it's not the first one to do what it's done. It's just the first one that put enough pieces together in order to achieve the wide success that basically paved the way for all these other cryptocurrencies. And so, so it's not necessarily the first or oldest technology. It's actually, when it came, it was actually, relying on, at that point, decades of prior work. And then lastly, as we said before, Bitcoin is largely following the path of a protocol rather than a company, whereas many other blockchains in the space end up looking more like a company in the sense that they're still very reliant on their founders, still very reliant on a centralized development team, whereas Bitcoin at this point is more distributed. And so whereas MySpace, of course, as a company, it followed the path of company, it had an early management change early on. And for example, they were slow to adopt to the shifting user base towards mobile phones, and so that was a key reason why they eventually fell to later networks. Whereas Bitcoin continues to optimize exactly what it tries to optimize for. So basically, it's the fact that there's not that many features on the base layer is again by design, and so it's not being surpassed in terms of technology by other protocols. It's not being overcome by later developments because every one of those developments comes with trade-offs in a way that Bitcoin has, as that ecosystem has chosen not to adopt, at least not on the base layer, in order to ensure some of those prior attributes of security and decentralization. So basically, another way of looking at it is that part of Bitcoin's success, in addition to being a well-designed protocol, is the path dependence. It's very, very hard to replicate Bitcoin's unique path dependence at this point. And so what I mean by that is Bitcoin was made by a creator that was, eventually left the ecosystem. He remains unknown, or they. And whereas many other cryptocurrency projects they take more of the path of a company, where they generally it's harder for them to achieve a level of decentralization, and it's harder for them to basically follow this very, very decentralized path that Bitcoin's gone through. It's very hard for them to distribute their coins in a fair way, and it's very hard for them to achieve the scale and the adoption that Bitcoin has. And so as full disclosure, I am long Bitcoin, I own Bitcoin, and I also advise some Bitcoin companies. But one thing I like to point out is that my research company focuses on multiple asset classes, and so I'm not tied to any one asset, and I'm happy to look at multiple different asset classes, both outside of the cryptocurrency space and in the cryptocurrency space. And that's why in many ways I've continued to focus on Bitcoin in my view as the primary cryptocurrency that offers a lot of value and that is unlikely to be surpassed anytime soon by a technology superior blockchain. So thank you so much for listening in, and have a great day.
All right, guys, let's switch over to session. Quite loud. All right, session 2. Bitcoin as a tool for economic empowerment. This is the one we have been waiting for. It's going to talk. It's Cathie Wood, it's Jack Dorsey, Elon Musk, and Steve Lee. It will start in around 9 minutes. Let's see if there's already something going on right here. Let's refresh it. So what do we expect, guys? Let me know in the chat. Do we think that Musk will say they will accept Bitcoin again? Probably Cathie has some good words for Bitcoin. If you don't follow her, you really should. She does some great investments. Yeah, I'm also having a trade open on the side panel. Just in case something happens, then I can just click a button and make a trade. It seems like the stream is now live. However, do we have music? We don't have music, it seems. Doesn't matter. Yeah, so let's talk about these 8 minutes until we start. What do we think? And by the way, if you haven't yet, press that like and subscribe button, guys. It really helps me. And this stream has been insane so far. 680 subscribers right now. 450 likes. We can get those likes up to 500. Let's go. Get ready to make a trade. Hopefully Elon makes a positive statement confirming we are still in a bull market. I don't think Elon can confirm we are in a bull market. But it would be nice if he expresses some love to Bitcoin after what he did like 2 months ago. But if he didn't plan on doing so, he wouldn't join this event. By now it will jump very high in a few minutes. I don't know. It already has gone quite high today. We can actually look at the price for a bit until we start. We'll start in around 7 minutes, guys. Let's get the price up. So this was the price action today after the big dump yesterday. So we came all the way back to this weekly level, which we retested again. Yeah, maybe this meeting will just give us the push above. Let's see. Of course, on the longer term, we're still down a lot, so we have a lot of upwards potential. But who knows? Maybe this meeting is the start of the next run up, that we get a bit of a relief rally. Would be very nice. Yes, I am 100% from the Netherlands. Moon. I hope it's not too obvious, but my you can't filter out an accent, right? I still believe Elon will be the knight in shining armor who solves clean energy mining for Bitcoin. Well, I think a lot of it already has been solved by China shutting down all its mining farms. That was a lot of not clean energy. I will short. Patrick will short. Yeah, that's also what I'm thinking of. Maybe I will short if nothing spectacular happens, you know. So it's an hour long. So we will see how the meeting goes, and you can kind of get a feeling of if something is still coming or not. Wow, guys, 718 subscribers and 539 likes. You guys are rocking it. Thanks. I love a Dutch accent. Thanks, man. Hello, Arno. Yes, I'm Dutch. What the fuck? There's a dog on my screen. I need to hug it. Come on. Where did Shimo coin go, by the way? The session is over. Track 1 is over. And in 5 minutes, actually 8 minutes it says here. That's a bit weird. Well, I guess they start a bit later. In 8 minutes, our next track will start, which will include Elon Musk, where most people are for, but I'm also very interested in what Cathie Wood and Jack Dorsey are going to say. I can only imagine it's very bullish. Yeah, guys, 8 more minutes left, and until that time, let's watch the markets a bit. If you're really interested in what's going on in the markets, I've had a pause from YouTube for quite a while. However, I'm returning with some technical analysis and such. So if you're really interested in that, press the subscribe button and I will upload a lot of videos about the technical analysis. I'm looking at this right here. No worries, guys, no worries. We will go to Elon Musk very soon. That last spokesperson was a dude or a girl? I assume it was a girl, also based on her name, but she did have a pretty special voice, I have to say. Relax on Trading, a presentation about the long-term greatness and sustainability of BTC. I agree, this is really about the long-term investing, also targeted at industry, I would say. I think definitely Cathie wants to kind of get the industry into Bitcoin, you know? Alrighty. Let's see, how long still? 6.5 minutes. Do you guys have some requests in between? Again, we go over the markets many times a week. I plan on uploading a lot of YouTube videos. I plan on doing a lot of live streams because I do believe that this region right here is the moment where you can make a lot of money. Because it's the time before we actually go up instead of doing it while we're actually going up. So these are important times, even more important than when we're actually going up, guys. Hey, guys. I love this channel. It has an English talking dog from the Netherlands. Thanks, Jose. Crypto Talk and Trading. Any member watching? Is that another channel? I'm in the Netherlands, actually. I'm not from Belgium or Suriname. Alrighty, just a few minutes left. A lot of Dutchies in the chat. I love it. Great, great, great. Yeah, so let's see. We are really struggling with this level right here. So yeah, like I said, maybe we can get to the last push where we can actually go above, test it as support, and then I will actually be pretty bullish for quite a while, because our next level will not be until 35k, which is another 10%. Pretty good. It could of course be that we get rejected again, that we don't get the news we expect, and we go down. But let's not hope for that. Let's hope they actually support us with some interesting news today. If Elon accepts BTC, do you think he will also accept Doge? He did mention something about that on his Twitter, right? That he was looking into Doge as an alternative to BTC. However, I'm really wondering what he has to say about the clean energy problem with BTC, because that was his main issue with BTC. And in my opinion, Doge doesn't really solve that issue. It's of course useful in its own way, but it doesn't really solve the clean energy issue. But I think since the China ban, a lot of miners who didn't use green energy got away. So maybe he has something to say about that. That's pretty good. Do you cover all cryptos or only BTC on your channel? I cover a lot of altcoins as well. During these downtimes in the market, I mainly cover the big ones. So BTC, Ethereum, and some major altcoins. And during a bull run, I actually also cover the smaller altcoins. Wow, 804 subscribers, guys. I love it. Thanks for subscribing. Hey, if we can actually hit 1,000 by this stream, which at this pace is just entirely possible, I can actually get monetization on my YouTube channel, which would motivate me even more to make these videos, of course. This is the dip. If you want to buy BTC now, it's the time to do it. A 50% retracement followed by consolidation, aka raging, and steady volume indicates another bull run. William, I can't agree more with you. I actually think that the bottom is in, or we only have a little more downside potential here. I don't think that we will shoot immediately to the moon, but a steady rise from here into late 2021, where we can have a bit more parabolic moves, is really the way to go. I will upload a video on my current macro outlook on the market. Going to shut up for now. Oh, well, we have a little bit of talking left. We do already have music. That's nice. I think it's pretty loud actually, but I'll leave it at the loudest stage. Then you guys can manage the sound yourself. Glad I found your channel. Greetings from Germany. Thanks, Rule. I'm glad to have you here. 866 subscribers. Guys, what is happening? This is insane. You guys are mad. And the likes are also going up to 650. I wouldn't even be surprised if we hit 1,000 subs. Can you share your Twitter? Yeah, it's exactly the same as my YouTube username. I'll type it in the chat. It's @PongoBTC. All right, 1 minute left. I will actually shut up now. I will remove my Doge face for now. Yeah, thanks for all the subscriptions, guys. It's still going up. I think we're getting that 1,000 today. Let's get into the live stream and we will talk about it afterwards. Let's hope for some good news. Have fun, guys.
More than 12 years after its creation, Bitcoin is just beginning to gain institutional acceptance. It's time we have an informed discussion. The B Word is a Bitcoin-focused initiative that aims to correct mainstream narratives about Bitcoin, explain how institutions can embrace it, and raise awareness around areas of the network that need support. Featuring Cathie Wood, Jack Dorsey, Elon Musk, Lynn Alden, Nick Carter, and many more. Join us in our effort to support the Bitcoin network.
Welcome everybody to the B Word. I'm Steve Lee, the lead of Square Crypto, and I'm here today to moderate a discussion about Bitcoin that will span from what makes it special to the its relationship with energy, the community ethos, and the future of Bitcoin. I'm joined by three special guests. The first is Cathie Wood, founder, CEO, and CIO of ARK Invest. Next is Elon Musk, techno king of Tesla and chief engineer of SpaceX. And finally, Jack Dorsey, CEO of Square and CEO of Twitter. So we have a lot to talk about today. So let's get to the talk and get right to it. I'm going to start off by asking each of you a question, which is what's shaped and influenced your views on Bitcoin? And let's start with Cathie.
Okay, Steve, thank you. Well, the first thing was our focus on disruptive innovation. So starting in 2011, Brett Winton, our director of research, who I know will be on the program later, he started talking about this thing called Bitcoin at the time. And it was a curiosity as we were doing our brainstorms in research. But as we learned more about this open source ecosystem, that might fulfill the role of the payment system that the internet neglected to build into the system, not expecting commerce. We thought, this might be something. And then I became even more interested when I realized that my economics would come into play as well here. And Art Laffer, my mentor from USC, and a monetary scholar, in 2014, I asked him if he would collaborate on a paper on Bitcoin. And he was a bit of a naysayer at first, but agreed to read the paper. He read the paper, tore it up, and from an economics point of view, really wanted to understand this. And he said, I think you got something here. This is a rules-based monetary system. I've been waiting for this for my entire career. So the combination of disruptive innovation generally, economics on top of that, and the huge misunderstanding out there as to what this is, that was intriguing and launched our research effort.
Thank you. Elon, what's influenced your views on Bitcoin?
Well, I've thought about money for quite a while, obviously since the PayPal days. And then the companies that preceded that, X.com, which I created, and Confinity, which Peter Thiel, Max Levchin, Luke Howry, and others created. when we combined the companies and made PayPal. So I've been thinking about money for a long time. And really, I think it's best to think of money as an information system, primarily an information system for labor allocation. And for practical purposes, it exists in a series of heterogeneous databases, like very different databases in bank mainframes around the world. It moves quite slowly in reality. It may seem to move fast sometimes, and it does with PayPal, which is real time. But the vast majority of the systems out there are batch processing. So the actual reconciliation may take 1 to 5 business days, sometimes longer. And you have the ACH system, which is ancient and still in operation, which is allows transfers effectively like a check would be an ACH transfer, but it's not secure. And you've got the credit card systems, which are also not secure. It would be like handing your username and password to a stranger in a restaurant if you buy a meal. So there's definitely an opportunity for something that is better from an information theory standpoint. So and there you can think of it like data on a network. I think is the way to view it. What has the most throughput? What has the least error? What drops the fewest packets? Fraud, for example, being a source of error. And government interference in currencies being a source of error. But it's fundamentally an information system. So I think it makes sense to support something that improves the quality of information with which we conduct the economy. And Bitcoin is a candidate for that. It does, I think, some things well, and it's obviously it's evolving, and there are additional things like Lightning being done on top of Bitcoin. But Bitcoin per se is mostly solving for scarcity, or rather solving for essentially having no throat to choke, decentralized. So there's no one who can be coerced in any way to empty their Bitcoin account. Well, I guess they could technically, but on an individual basis, but the system as a whole cannot. And it has an open ledger, which is also quite good. But transaction volume is low. Transaction cost is high, and usability for the average person is not yet very good. But it has a lot of potential. And I should say that, like, I'm not, and I apologize for taking a long time, but there certainly is a lot to say. In general, I'm a supporter of Bitcoin and the idea of cryptocurrency in general. But as I've said publicly, we do need to watch out for crypto taking, especially Bitcoin, using proof of work to maybe use energy that's maybe a bit too much and not necessarily good for the environment. So, but on balance, I support Bitcoin, and I'm not an investor. The only publicly traded stock I own is Tesla, and the only significant thing I own outside of Tesla is my SpaceX stock that could help create both companies. So, but apart from that, I do own Bitcoin, and Tesla owns Bitcoin, SpaceX owns Bitcoin, and then I do personally own a bit of Ethereum and Dogecoin, of course. So.
Okay, great, thank you. And we'll get into some of those issues in more depth as well. Jack, how about you? What shaped your views of Bitcoin?
The network and the community. It's deeply principled. It's weird as hell. It's always evolving, and it just reminded me of the internet when I was a kid. And I encountered alt cypherpunks when I was fairly young, and this was a topic of discussion for years. I didn't touch it until 2008 when we started Square. Elon and teams at X and PayPal inspired a lot of what we were trying to do, trying to bring in more to a physical world, but we encountered this crazy predatory system that was slow, that was obtuse. And I think, one of the things that we tried to do, which X and PayPal also tried to do, is build an abstraction layer around this complication. and around this predatory nature that the financial industry can tend to be, and make it work for people. But when I saw Bitcoin in 2009, you see a chance to replace the whole foundation. And everything that Elon was talking about in terms of ACH and the credit card networks were built with very different agendas in a very different time frame, and it's crazy that they still exist and they have scaled, but they just are not relevant to today, and they're certainly not relevant to the future, especially when you consider the entire world and countries like Nigeria or Ghana or India and its interconnection with countries like the United States and Canada and all over Europe. So what really drove my thinking and drives my passion around it is, like, if the internet gets a chance to get a native currency, what will that be? And to me, it's Bitcoin because of those principles, because of that creation story, because of its resilience, because of the number of tests it's been. But what inspires me the most is just the community driving it. It just reminds me of the early internet. It's the only reason that I have a career, because I learned so much from people like who are building Bitcoin today, and I continue to learn in that sense, and I'm so grateful for it.
So that's a good segue into the next question I'd like to ask you, Jack. Is you said before that Bitcoin changes everything. Can you speak more to that?
Well, I just think that you know, a lot of what we experience in life, when you really get down to the foundation, a lot of our monetary policies, a lot of our monetary systems cause so much distraction and so much cost. And when you get to a system where you have the potential for people to truly own it, they can verify it themselves. You don't have to have trust going in. You don't have to trust it at all. You can verify it through source code or whatever your appetite is, and that any particular person can help drive the future of it. And at the same time, it's not controlled by any state. It's not controlled by any bank. It's not controlled by any corporation. And these three parties of people who participate in the network, people who mine, and also the developers, constantly debating the correct roadmap and the way forward, is a beautiful thing. And I don't know of many other consensus-based models that have existed at that scale for this long with this amount of success. And we're still fairly early. So when, you know, I met a woman in Ethiopia 2 years ago, and she was trying to create the lift for Ethiopia. Elon, I think I reached out to you at that time as well, because she really wanted some Teslas. She still has to take paper fiat cash from her passengers and pay all of her drivers in the same way, because there's no monetary system that she can utilize. There's nothing digital. And Africa as a continent is hugely interconnected from a monetary standpoint, but also hugely taxed in that same way. So a lot of the potential that I see, you know, the internet having a native currency helps her build her business in a much faster way. And also, if you consider something like Bitcoin existing before YouTube, before Twitter, before Facebook, a lot of the business models that we have today would not be the same. We would certainly not have the dependency we have upon the advertising business model if Bitcoin existed pre-Twitter. And I think the amount of business models that it enables, the amount of innovation it enables going forward, especially when you can consider the whole internet instead of going country by country by country by country, which you have to whenever you're doing with finance, it really just opens the aperture. And that is what I want to see in my lifetime, is a currency that is standard and sound for the internet that everyone can use.
Great. A hallmark of Bitcoin is its fixed supply of 21 million coins. Elon referenced that earlier. It may be the first system that humans have created that humans cannot later change. Cathie, I'm curious, with your background in monetary history and macroeconomics, what are your thoughts on that type of system?
Oh, well, I'll recount the story about Art Laffer and our going through the paper. And he said, as I said, first rules-based monetary system, global, ever. This is a very big idea. Once we had convinced him of the ecosystem itself. Now, this is the role that it's playing, given that the rule is a quantity rule, that 21 million units, is really a store of value role. So there are three roles of money. Store of value, very important. The means of exchange, so for transactions, and the unit of account. Every good priced in terms of whatever the unit is. So store of value is its primary use right now. The others exist. Unit of account, reserve currency of the crypto asset ecosystem. That's being seeded a little bit towards stable coins right now. But the store of value is a very big role. And means of exchange with apps built on top of the Bitcoin blockchain, we think is going to become more of a reality. Right now, high value transactions take place over Bitcoin, and that is a very useful role. So we look at those, and I remember saying to Art, "How big could this be?" And he said, "Well, how big is the U.S. monetary base?" Well, today it's $8 trillion. $8 trillion. At the time we were talking, it was $4 trillion. So we've gone through another crisis since then. And so this store of value, this idea that purchasing power will go up over time if demand rises relative to supply ultimately fixed at 21 million units. That's a very good thing. Purchasing power going up globally around the world. And this idea that it's a hedge against confiscation of wealth. And that can take place in a myriad of ways. But inflation, and especially hyperinflation in emerging markets, is the primary way. Talk about destroying purchasing power. So that's a very big idea. And I'll also mention deflation. In some ways, it's a hedge against deflation. I know some people are confused that we at ARC think that we're in a deflationary environment here in the United States. If that is true, the odds of a hyperinflation in the rest of the world, especially in emerging markets, is also true. So, but this deflation, and we learned from 08-09, there's counterparty risk associated with deflation. And I think Bitcoin would be a hedge against that eventuality as well. So it's a very big idea.
Right. I suspect among us, there's not a lot of debate about Bitcoin's potential as a store of value. But Jack, you referenced earlier it being or becoming the native currency of the internet. Can you speak more to that, and also how it relates to maybe how institutions think about it?
Yeah, I mean, like just simple example. If I happen to be in Ghana and my family is in Nigeria, currently I can take anywhere from and I need to send money back, anywhere from 10 to 30% off the top just to send that money back. Whereas if you just focus on the worldwide remittance problem, Bitcoin solves so many of those problems today instantly without having to go through any intermediaries or any slowness or complicated systems that a corporation or a state created. So I think having sound money that is separate from the state is the idea. Having it completely verifiable by everyone, including the state, including corporations, including individuals, including developers who want to build on top of it, is quite powerful, and that's what keeps it secure and strong. And I think that's we need more of that, which is why this one of the reasons why this conversation is so important is as entities come into the space, it's not just buying an asset and holding on to an asset and treating it as an investment. There's something special that created this, and something precious and something very unique, which has to be protected, and we need to do whatever we can to help that thrive as well.
Elon, I'm curious your opinion on this. You mentioned earlier about Bitcoin's throughput, or the importance of throughput, maybe some concerns around Bitcoin. Can you speak? Do you think Bitcoin can become peer-to-peer cash?
Well, Bitcoin does have a fundamental scarcity limit at the base layer that's designed in. That doesn't mean you can't have some layer 2 system in theory like Lightning. And I understand Lightning is doing well in some small countries. There's some question mark as to whether you need a money transmitter license. Just a debate as to whether that's needed, given that it is not open ledger. So that's a whole separate debate, of course. But Bitcoin by itself simply cannot scale to be the monetary system for the world at base layer. But with a second layer, this is possible depending upon how that second layer is implemented. Yeah, that's part of why I think there may be some merit to something that may seem silly, like Ethereum, like Dogecoin. I think Ethereum also, like I said, the three things I own outside of SpaceX and Tesla, and obviously it's a Neuralink and Boring Company, but of any significance are Bitcoin by far, and then some Ethereum and some Doge. So if the price of Bitcoin goes down, I lose money. I'm not sort of I might pump, but I don't dump. It's not a case of I definitely do not believe in getting the price high and selling or anything like that. And I would like to see Bitcoin succeed. I think there's some merit to this is not a slam on Bitcoin. There's some merit to considering something that has higher max transaction rates and a lower transaction cost, and kind of seeing how far you could take a single layer network where the exchanges act as a de facto second layer. I think you can probably take that further than people realize, and as bandwidth increases over time, latency decreases. SpaceX's Starlink is actually playing a role in this, and I think long term people will probably have access to worldwide access to gigabit level connectivity at low latency, and so at low cost. And so then your base layer could do a lot of transactions if you take that into account. So yeah, but like I said, Bitcoin with a layer 2 system, so they could scale to do a vast number of transactions. Same goes for Ethereum.
Question about the scaling at the layer 1. The concern from the past 5 years of debate in the Bitcoin community is that would sacrifice too much decentralization and hurt the censorship-resistant properties of Bitcoin. I'm curious if what are your thoughts on that? Are you sensitive to that? And are you concerned about losing some of the special properties of Bitcoin or another cryptocurrency by scaling at layer 1?
Yeah, I mean, these things are helpful to use the physics tools of thinking and say, scale up, scale down, and see if it still makes sense. So if scaling up the transaction block doesn't make sense, why don't you scale it down? And have it be, so that somebody, with a laptop from 2008 can still run a Bitcoin node. Why not slow it down? Oh, you want to slow it down? Well, maybe you're at the wrong number then.
there's actually there's members in the community that do want to slow it down, but I understand your point.
It's silly. The reality is the average person is not going to run a Bitcoin node. So this is and Bitcoin, it was a lot of clever ideas, but these parameters were set, I don't know, what, in 2008 or something, maybe 2009. And there've been some improvements since then, but not a lot. So, it's sort of like there was still, in 2008, there was still a non-trivial number of people on modems. So, now it is quite common to get a 100 megabit connection just for a house. Some houses have gigabit connections. So, and that trend is obviously in the direction of higher bandwidth and lower latency. And if somebody else doesn't do it, Starlink certainly will. So I have high confidence that you will be able to maintain a decentralized finance system while still having a much bigger blockchain, aka ASCII text ledger, a hash ledger. You can make the hash ledger bigger without suffering from decentralization as the average connectivity improves, obviously.
One idea would be to to put a Bitcoin full node in Starlink terminals. That way more people would be running it.
Actually, I have run this by the team at one point. I had this idea, which is kind of off the wall, but let's say you need a little space heater, and normally your space heater would just be pure entropy. Well, what if that space heater was also a Bitcoin, Ethereum, Doge mining node? Pick your currency, and so then you'd be heated up, and you would also mine your crypto and have connectivity in one.
I love that idea.
Yeah, I mean, better than running a space heater.
Absolutely. Are there any other, so you're drawn to Dogecoin a little bit. Are there any other gaps in Bitcoin that you see that cause you to be drawn towards Dogecoin?
Oh, I think, I think there's Doge has the Doge community, I think, is somewhat irreverent, obviously, and has great memes and loves dogs, and I love dogs and memes, and it doesn't take itself too seriously, I think there's Occam's razor, which is the simplest answer is the most likely. It's a summary of Occam's razor. The simplest answer is the most likely one. Then there's a friend of mine came up with a variant on that the most ironic outcome is the most likely one. And then I have a variant on that, which is the most entertaining outcome is the most likely one. So if that is true, then the most ironic and entertaining outcome would be that the cryptocurrency that was started as a joke to make fun of cryptocurrencies ends up being the leading cryptocurrency. That would be the most ironic outcome.
Jack, what are your thoughts on that? Is Bitcoin resilient enough to overcome that?
I think it's resilient, but also I think you find, that's what attracts me to Bitcoin in the first place is the irreverence. A lot of that just brings it forward, and at first go it makes it a little bit inaccessible, but as people get into it, it makes it more accessible and more spreadable. And I absolutely think the resilience is there. I think it's important to have fun as well. And anyway folks can express themselves. I think that goes back to the main idea of how do we create a native currency for the internet? Anything that goes towards that path, that's whatever wackiness or fun we can have along the way, that's going to make it a lot more enjoyable, and it's going to make a lot more people want to use it.
I'd also point out there's nothing stopping someone from creating a Bitcoin wallet that's fun and has memes, has dogs. That's possible as well. Great. Let's move on
right now at this point.
Let's move on to the next topic, which is Bitcoin and energy. It's a really hot topic that lots of people are talking about. let's start with Elon. You've been vocal on this. You've said that. I mean, you said many things about it. You've also said that Tesla will resume payments in Bitcoin payments if the renewable energy is approximately 15% and sort of looks like it's on a positive future trend. What do you think the state of things are with respect to that?
Yeah, so I do think that there appears to be a positive trend in the energy usage of Bitcoin. Actually, part of this is due to the drop in Bitcoin price. I mean, what I observed, or what I thought I was seeing, there may be some disagreements on this, but from when Tesla announced that it had acquired Bitcoin and was doing Bitcoin transactions, there was a massive run-up in the Bitcoin price, and also a massive increase in the amount of energy used to mine Bitcoin. And I think I understand renewable energy quite a bit. I mean, Tesla does solar and interacts with a lot of wind generation through our Megapack, because basically need to store energy from wind and from solar. So we're pretty plugged into the renewable energy industry. And there was just no way that you could basically double or triple the amount of energy in such a short period of time with renewables. You could shovel coal that fast. And so I was like, look, this is too sketchy. Tesla's mission is accelerating the advent of sustainable energy. We can't be the company that does that and also not do appropriate diligence on the energy usage of Bitcoin. So all I did was I said, look, we're going to suspend Bitcoin transactions for now. We're not selling any Bitcoin, nor am I selling anything personally, or nor is SpaceX selling any Bitcoin. Again, I want to emphasize SpaceX, Tesla, and I own Bitcoin. I also own a little bit of Ethereum and Doge, but the companies just own Bitcoin, and the Bitcoin that I own is worth much more than the Ethereum or Doge. So clearly, if I'm if these actions negatively affect me financially, if I was purely financially motivated, then I would not express this reticence about Bitcoin energy usage. Now, it looks like Bitcoin is shifting a lot more towards renewables, and a bunch of the heavy-duty coal plants that were being used, unequivocally being used, this is not a question mark, have been shut down, especially in China. So I think it's probably, we want to do a little bit more diligence to confirm confirm that the percentage of renewable energy usage is most likely sort of at or above 50%, and that there is a trend towards increasing that number, and if so, then Tesla will resume Bitcoin, accepting Bitcoin. So I think we want to just do a little bit more diligence, and I think, but most likely the answer is that Tesla would resume accepting Bitcoin, most likely.
That's great to hear. I would agree with that. Cathie?
Yeah, may I ask a question? Elon, I'm not quite sure if you saw the paper that Square and ARC did together on making Bitcoin mining a part of a utility, a broad-based utility ecosystem, whereby, the overage from sunshine or wind powers the Bitcoin mining machine, thereby enabling the proliferation of renewables to a much faster extent, or at a faster rate than otherwise would be the case. What do you think of that?
Well, the problem is that in order to operate so-called mining or hashing rigs, in order to operate a bunch of hashing rigs, effectively, you have to run them 24/7, which means you need base load. You can do that with solar and wind plus battery, but if you only did it based on solar or wind overage, your hashing rig utilization would be much less. So you'd be at a disadvantage.
Sure,
hydro or geothermal are great as renewable means. I'm also pro nuclear. I think modern nuclear power plants are safe, contrary to what people may think. I really think it's possible to make very extremely safe nuclear. I'm talking about fission. You don't need fusion. And then of course fusion, you just got that big fusion reactor in the sky called the sun. It comes up every day. But I think a combination of solar and wind plus stationary storage will get you that base load, so you can run hashing 24/7.
Jack, I'm curious. You've stated that Bitcoin incentivizes renewable energy. That's what we're talking about now. Do you have any additional thoughts on that?
Yeah, I mean, everything that Elon said and Cathie mentioned, but it's also incentivizing a lot of innovation in just energy space and just like looking at unused energy. There's a company called Great American Mining that caps the methane flares on oil fields to power their rigs. And you just imagine, and you mentioned nuclear, Elon, as well, and just imagine all the unused energy that is just being wasted every single day. And being able to get that energy and converting it into a secure, sound money system for the planet feels like a worthy trade-off. And that's the sort of incentive that I think is most powerful, is like, how do we reuse what is being currently just dumped on the ground and wasted and not considered, and how do we do that at scale? And I think that's a bigger conversation that I think is missing. But I agree with everything that Elon has said, and also the paper we put forth.
I'm curious if any of you have thoughts on how what the industry can do to accelerate the transition to renewable energy. And like Elon specifically, could Tesla Energy or Starlink play a role?
Well, I think Tesla can play a role. Tesla's literal reason for existence. The reason I've put so much of my life energy into Tesla, which is a lot. In fact, I would say that I've had some pretty tough life experiences, and Tesla is responsible for probably 2/3 of all personal and professional pain combined. Just to give you a sense of perspective there. So this is a hella hard situation. But we do solar, commercial solar, solar retrofit, as well as the solar roof, and we make consumer battery packs called Powerwall for houses and small businesses, and then the utility scale, which are gigantic. We've done now a number of gigawatt-hour installations. That's a lot. That's a lot. And a lot of them actually have been for load leveling the grid. Mostly they are, and combined with the first really big one we did, which is 100 megawatt installation in Australia. That's actually helped stabilize a huge portion of the South Australian grid, because it's able to react so fast. In fact, at first, because they've got a billing system in Australia that I think works at the sort of millisecond level, and we were operating at the microsecond level. So the system was operating so fast that the measuring system couldn't see it. But so Tesla's certainly doing a lot to enable renewables, especially wind and solar. And in fact, the limiting factor for us right now is cell production. So we need to both internally get the Tesla internal battery cells produced, as well as increase supply from suppliers. Generally, when I talk to our suppliers and they say, how many cells would you like us? How many cells can you make? Because sometimes they're concerned, was Tesla going to compete with them on cells? I'm like, no. If you want to make the cells, be our guest. It's just that we need a crazy.
Okay, guys, I'm going to reset the stream for a bit. Don't worry, we are still here. That's just difficult for Tesla to support in that situation. So I think
But I do think long-term renewable energy will actually be the cheapest form of energy. It just doesn't happen overnight. But as long as there is a conscious and determined and real effort by the mining community to move towards renewables, then obviously Tesla can support that.
That's great. Cathie, we've been talking a lot about energy, but many institutions are facing questions around Bitcoin's relationship with ESG. Can you maybe speak a little bit more to what is S and G in ESG and how Bitcoin might support those?
Sure. So E, of course, is environmental, S is social, and G is governance. And there is a massive movement afoot in the institutional world, especially, to embrace ESG and make sure that their asset managers are doing the same. So if you we've just talked about environmental, and I really do believe that Bitcoin will be much more environmentally friendly, certainly than traditional gold mining or the traditional financial services sector. In many ways, it already is, and it's just going to get better that way. In terms of social, I know that many institutions, when they are thinking of social, they think of diversity and equity, pay equity, and all of that. But from our point of view, the disruptive innovation point of view, social is much more than that. It is saving lives, of course, autonomous technology, that would be another topic for Elon. But in this case, allowing access to payment technology, as Jack is saying, everywhere around the world without friction. And just back to the remittance example, I think if I've got these stats correctly, there are certain countries in the world that are incredibly dependent on remittances for GDP. Tonga, 37%, El Salvador, which just deemed Bitcoin legal currencies, 24%, Nepal, 24%. And I think the remittance industry globally, roughly 700 billion. So saving people these egregious fees, think about it, you're paying anywhere from 8% to, as Jack said, 30% of your $100 that you're sending back to your family. That is social responsibility, I would submit, as is just the economic empowerment that Bitcoin will enable. We've talked about that already. And I know that Alex Gladstein is going to be talking later about, the 4.3 billion people in the world who are hostage to authoritarian regimes, or the 1.3 billion who are living in double-digit and triple-digit inflation, if not more. Saving them from the destruction of their purchasing power certainly is a noble social goal. So we expand social to be much more than the traditional ESG community. And then on governance, you've got the transparency of the ecosystem. It's completely transparent, unlike the opaqueness of financial systems and the toll takers in the traditional financial world. And I think a huge part of governance in the Bitcoin ecosystem are the Bitcoin core developers. Now, before I met them, and I've had the pleasure and the honor of meeting many of them, that was a part of this ecosystem I didn't understand. But actually getting to sit down and talk to them, if I have a learning curve need, it certainly is on the technology side. But in terms of talking to them about economics, economic theory, failed monetary regimes historically, they know economic history, many of them, better than anyone I've ever met. So that gives me a great degree of confidence that, they do believe they are on a noble mission. They could be paid a lot more than they're being paid right now if they worked at Google or Facebook or some of these other areas, but they've chosen, this sense of purpose for a noble goal, and they have incredibly strong technology backgrounds, as well as a good understanding of economic history, especially monetary history. And it gives me a great deal of comfort as I think about the governance of the ecosystem, much more so than I think we would find in other financial ecosystems. And just to give you an example of that, I think 2 years, we were talking about there's a big debate about reorganizations, I know, in the Ethereum network right now. Well, we saw the core Bitcoin developers and others at work back in 2019 when Binance tried to reorganize in order to reclaim 7,000 Bitcoin that were hacked. And they just wouldn't allow it. So we've already had some very good tests of the Bitcoin ecosystem, including developers. So that would be my answer.
Thank you. And it's a great transition to the next topic area, which is Bitcoin ethos. And what is Bitcoin ethos? I mean, Bitcoin was born as open source, and it's very transparent. There's also a staunch defense from the community around decentralization and a lot of the core principles of Bitcoin. So let's talk a little bit about that and what makes it special. Jack, Square has done a lot to support open source Bitcoin. Can you tell us a little bit about what Square has done and what advice you'd have for other institutions looking to follow in its footsteps?
Yeah, I mean, I was very skeptical of corporations when I was a kid, and I'm still skeptical of corporations today. And, as we've used corporations to be, they've been great vessels for what we need to do and the ideas that we need to bring to the world. But, Bitcoin is not that. And when we were considering Bitcoin and how Square intersected, I was really concerned with how we don't disrupt the community in a negative way, how we promote what is amazing about it, and how we help it grow in that way, in the way that it wants to. So we created your team, Steve, which is Square Crypto, which is hiring open source developers to work on whatever they want and whatever they think is most important to help Bitcoin. We created an organization called Copo, which we gave up all of our crypto patents so that the community can use them in defense against trolls and some crazy characters we won't name. And we continue to find ways that, following that Bitcoin path, we're going to create a hardware wallet. We're probably going to do a lot more in hardware. Everything that we do in the space is going to be completely open source, from the hardware design to the software, taking in the community's push. And we're building a developer platform as well in the same open development, open source, and completely transparent. So I think as institutions or companies like ours consider getting in the space, I think contribution back to the community is important. Tesla did this with accepting payments for Tesla and finding security holes and improving the stack. And as I said before, we can't just see this as an asset that we own and an investment vehicle. This is something that has the potential to change everything and make the lives of everyone on this planet better in some small, maybe marginal way, but those margins will be meaningful as they compound over time.
Great. Elon, you've tweeted before that any wallet that doesn't give the user their private key should be avoided at all costs. Can you tell us more about why is that important, and how does what's its relationship with decentralization?
Well, it's difficult to say that if you own crypto in an exchange and the exchange does not give you your private keys, it's not clear that you own anything. I mean, if there's something that, if that exchange breaks or is hacked or or is subject to seizure by the government or something like that, your crypto is gone. So in order to actually have properly decentralized finance, which I'm a fan of, I think it makes sense. Then you have to own your private keys, and you should be the only one who has your private keys. So if you're the only one who has the private keys, then you own it. If someone else has your private keys, effectively they own it too, and the security of your crypto is then dependent upon them or any entity that can affect them. So yeah, I think what Jack's doing sounds like a good idea to have a hardware wallet that's the only thing that contains your private keys. I think that's like in terms of sort of empowering the people, which I very much believe in. Then I think you want to have people have their own wallets and be the only ones that have the private keys to that wallet. So-called wallet, the other side of the of the crypto.
Right. I agree, and I think we'll see an emergence too of new solutions that use multi-sig, like with a 2 of 3 keys, where the user has 2 keys, and then you get assisted custody by having an institution hold a 3rd key. Can be a good solution as well. Yeah.
Well, you can just put your private key in something that has dual access or voting access as an application on an existing network.
Right. So the Bitcoin community is known for staunchly defending Bitcoin's principles. Sometimes it can be rude and aggressive, but I think what it stems from is just a desire to not have wealthy or powerful people or institutions negatively impacting Bitcoin or sort of changing the rules in favor of them. I'm curious to hear from each of you what role you feel like you and your own institutions, your own companies, what role can you play in Bitcoin, and how do you positively impact it without having these negative drawbacks? Cathie, maybe start with you.
Sure. Yes. Well, ARC has stood for 2 things: democratization and transparency. Democratize it. We're the closest you'll find to a venture capital fund in the public equity markets, and I kind of feel that Bitcoin, or we have Bitcoin's DNA from that point of view. One of the things in terms of democratization is education. We have one of our missions, values, is to educate, and I do believe that that some of Yassin El-Mandra's white papers. Yassin's our lead crypto analyst, who's worked very closely with you, Steve, on this conference, are helping the cause. We've done, and not only for retail investors, we found that we had to do a bit more when it came to institutional investors, just because of the way that they invest and the way they like to receive information. So just like in our investments, we've been, the retail community has been more attracted to us first, and now the institutional community is coming along. So I do think our transparency of research, especially in the social world, social media, pushing our research out for free to anyone, is part of our way of helping the community. And I do think encouraging, and this is something that Jack just said, I would encourage the support of the Bitcoin core developer community. As I said before, it's amazing to me, having gotten to know some of them, how strong their sense of purpose is here. And so we'd like to be helpful in making that happen as well.
That's great. Jack, how about you? How do you view your own personal role and the companies you run?
I think my own personal role through the companies I run is to really push for more decentralization, like at everything that we intend to do with the wallet, being non-custodial, building a developer platform, focusing on non-custodial solutions. On the Square side is important. being completely open development and open source, but I also think it's important on the Twitter side as well. My biggest focus right now is on a decentralized social media protocol. We're calling it Blue Sky. It's super early, but we've learned a lot from what makes Bitcoin Bitcoin and why that's important. I've learned a lot in that sense as well. And I think, just continuing to push on that thread and show it with our actions every single day in support of this community that's taught me so much and I think will benefit so many people. That's what I'm focused on.
What about letting Twitter advertisers pay in crypto?
Yeah, I think enabling anyone. As you know, Elon, if we had Bitcoin or native currency for the internet before Twitter started, it just creates so many different business models that we wouldn't have to be so dependent upon advertising generally. And
sure.
I do believe that that we have them, any form of payment that they want to use, we should be able to take. So okay. Absolutely, but I'm more focused on how do we create economic incentives in the network itself without having to rely on advertising.
Yeah, it's just that the money has to come off of the crypto so-called coins, the hash strings, have to come off and get translated into real products and services. So the more sort of off-ramps there are to real products and services, even at the institutional level, although there are certainly many small advertisers on Twitter, it seems like accepting Bitcoin, maybe some other cryptos for advertising payments on Twitter would be supportive of Bitcoin.
100%, and also looking at just general commerce
sure.
through Twitter itself.
That was great. Sorry, what, Elon?
I was asking Jack if he's going to do it.
Oh. Can we get a product announcement today? Elon, how about you? You obviously you're a big personality on Twitter. What are your thoughts on your role and your company's role in Bitcoin and sort of preserving the ethos?
Yeah, I generally think we should do things that benefit the people as a whole and increase the probability that the future is good. So, I think to me it just seems self-evident that we should kind of take these set of actions most likely to make the future good. And I think probably crypto or some of the cryptocurrencies will make the future better, most likely. It's not, I always think of these things in terms of probabilities, but I think it's probably better for there to be a prosperous Bitcoin, Ethereum, Dogecoin, maybe some others in the future. And I think it can have an empowering effect for individuals and increase the power of the individual relative to government. And really, if you think of government is just a corporation in the limit. So sometimes some people are against corporations but for government. It's like, guys, government is just a corporation in the limit. It's the biggest corporation of all, and it's got a monopoly on violence. So if you don't like corporations, you should really hate government.
There you go. All right, we got about we'll try to wrap up in 10 minutes. So let's move on to future of Bitcoin. So Tesla and Square have both put Bitcoin on the balance sheet. Cathie, I'm curious to hear from you. What advice would you have for other institutions looking to put Bitcoin on their balance sheet?
Well, I guess the first piece of advice is, just make sure, and I actually learned this after both Square and Tesla put Bitcoin on their balance sheet. The Bitcoin is being treated as an intangible asset. And so we need to get FASB to reconsider this, because with an intangible asset, if the asset goes up in price, it can't be marked up on their books. But if it goes down, it must be marked down. So, there's some asymmetry there, which is, we need to change that given what we believe Bitcoin is. And I do believe if I'll harken back to something, well, it was either Elon or Jack said, think about it. You take away the boundaries, the different currencies. Just think about how explosive growth could be, and how wide-reaching taking the friction out of the system could be. So, I would encourage corporations to think about that this ability to do business anywhere in the world. Ultimately, obviously, we're paving the way here. That's certainly a consideration. It also will serve as a hedge against inflation, especially, and as I mentioned earlier, there are a lot of emerging markets that are suffering from significant inflation. In other words, the purchasing power of those populations is going down. So they are going to migrate to Bitcoin and other ways to preserve purchasing power. And again, being able to sell to them in that kind of currency would be very useful. I'd also suggest, once again, this idea of deflation, I think, is going to be a real thing. There's going to be good deflation caused by innovation, so demand will boom because of that. There's going to be bad deflation because so many companies out there have not been investing enough in innovation. Their products are going to go obsolete, and they're going to be stuck trying to service the debt that they piled on because their shareholders wanted profits and wanted them now. So they leveraged up to buy back their shares and pay dividends, and so I think that's going to be the source of bad deflation and counterparty risk. And we learned from 08-09 that counterparty risk can be devastating. Almost cataclysmic. So a hedge against that as well, I think, would be another reason to do it.
Great. Yeah, it's funny. It kind of like Tesla's bank balances in Europe have negative interest rate. It drives me crazy.
Yeah.
I mean, technically, if you've got like 2% inflation on 1% interest, you're technically minus 1% return. But nonetheless, it is quite annoying to just see your bank balance drop in real time in Europe. Europe has negative interest rates. This is insane.
Yeah. Paying the banks, paying the banks to hold
the bank to keep your money. I'm like, what?
It is crazy.
Like, what? We definitely move that into Bitcoin.
I believe Ray Dalio said, "Buy Bitcoin and not bonds." So there you go.
Mm-hmm.
Yeah.
Jack, you've talked about design being an underfunded area in Bitcoin, and Elon earlier mentioned usability could improve a lot. I don't think anyone's going to argue with that. What do you see as the future of how can design impact Bitcoin?
Yeah, I mean, I think that the Bitcoin network is beautifully designed as a protocol in the way it works. I mean, it went after a single problem, and it does in an absolutely astounding way. But I think the endpoints of people getting into it is still a little bit confusing. So I think the more energy we spend on wallets and making sure that the wallets are simple and accessible and they're non-custodial as well. Yeah. I think the best example of this that I know of is probably this wallet called Moon. And it's just simple, straightforward. It's it does an amazing thing with key management that my mom and friends new to Bitcoin can understand. Does amazing in storage, and it also has a very clever implementation of Lightning, so that you can use it in a transactional way without having to think about it, just with QR codes in a way that makes sense. So more work like that, I think, really brings us forward.
Great. Let's wrap things up with a final question for each of you. I guess what is your hope for Bitcoin? How it can impact the world? Let's see, Elon, do you want to start with that? So what's your hope? What's your hope for Bitcoin?
Well, my hope for I guess crypto in general is that it can improve the efficiency of the information system that we call money. So if the core efficiency of money is improved and and money has less error, where, like I said, error is like any kind of government interference or fraud or anything like that, this will naturally lead to basically a better standard of living and more power to the individual, which I very much agree with.
Great. Cathie?
Yeah, and I would segue from what Elon just said is, money has powerful network effect qualities. And so, we talked about ESG earlier. I think that, of course, that aspiration, having, this money be the best from an ESG point of view, that's really talking about solving some of the world's problems right now, which we definitely want to do. But I also am very excited about this idea of network effect and the convergence of blockchain technology and artificial intelligence from a technology point of view. I think, think about the internet in the earliest days. We couldn't imagine what was going to happen, but the impetus to growth was pretty incredible. So I am looking at, this rules-based monetary policy, making for better lives around the world, as we've just said. But I'm also looking at the technology itself and the convergence between blockchain technology and artificial intelligence, to change the world in ways that we cannot imagine right now, solving even more problems, but creating more opportunities as well, which is the history of technology and disruptive innovation.
Jack, what's your hope for Bitcoin?
My hope is that it creates world peace or helps create world peace. I mean, Elon said it earlier, we have all these monopolies of violence and the individual doesn't have power. And the amount of cost and distraction that comes from our monetary system today is real. And it takes away attention from the bigger problems, some of the bigger problems that Elon is trying to solve, like get us to a multi-planetary humanity. All these distractions that we have to deal with on a daily basis take away from those bigger goals that affect every single person on this planet, increasingly so. So it may sound a little bit ridiculous, but like you fix that foundational level and everything above it improves in such a dramatic way. So it's going to be long term, but my hope is definitely peace.
That's fantastic. Well, I'd like to thank all three of you for giving us your time today. It's been a fantastic conversation. Thank you to the audience for tuning in. The B word is not just this discussion, but we have a lineup of incredible speakers and content. So I encourage everyone to check it out. Thank you very much.
All right, thanks.
Thank you all.
Thank you.
All right, guys. Let's get our face back. What a session, huh? All right. Let's turn this down for a bit. All right, so we have a few options on what we can do right now. Probably a lot of people are leaving. Thank you all for watching. I want to start with that. This subscriber amount is insane to me. 1,630 subscribers. I started with 300 when I started the stream. You guys are amazing. Thank you all for subscribing. Thank you all for pressing that like button. And we will continue the stream. There are a few things we can do. We can, first of all, watch the rest of the conference, which continues in 4 minutes. What's actually going on right now is that we will talk about the developer ecosystem. I can understand this might be not interesting for everyone. We can talk about this session, or we can talk about the prize action that has happened during this session. So I will actually put this in the chat right now as a poll, and let's see what you guys want. So we can do all three of these. I'm a developer myself, so I will be interested in watching the rest of the conference. But we can talk about any of these things. We will talk about the price action eventually. If not today during this live stream, I will post a video just summarizing everything, what happened to the price, what was said, etc. Just a very, very small summary. Most of you are interested in what Elon Musk has actually said. He actually said some positive things for Bitcoin. Of course, he couldn't resist to mention Dogecoin. But yeah, he was quite positive about Bitcoin, and they even asked him whether he wanted to start accepting it again. He said that we are right now in a phase where things are looking optimistic. So that doesn't mean that he will accept Bitcoin immediately. I'm sorry, but that does mean that in the future he could actually accept Bitcoin again as a means to purchase a Tesla. For the rest, it was just a very informative discussion, and I'm really impressed by Cathie Wood. I already was, but maybe even more right now. Let's see. 42% says watch the rest of the conference. It's actually pretty close between that and talking about the price action, which to me means that a lot of you guys are interested in watching the rest of the conference. I know that the price action is right now winning. However, I think we will watch at least the next session until it becomes boring. And you guys can tell me in the chat when it becomes boring. Then we can talk a bit about the price action. And if we don't come to the price action right now, I will definitely make a video about the macro outlook and the price action during this session. All right. So we are up to 1,680 subscribers. Guys, if you're interested in those videos that I'm talking about, please drop a subscribe. And there will be a lot of videos following. Let's see. This track is ended. Click for the next track. Okay, so now we're going to talk about open source development, the Bitcoin developer landscape, and just everything that has to do with Bitcoin and developing, and blockchain and developing. Let's see, it's super close. It's actually quite even. I know there's 1% more about talking about the price action. I'm going to do a video about this. That's what I'll decide. So I'll end this poll right now. And we're gonna watch this session too until it becomes boring. If it becomes boring, let me know in the chat. Guys, thanks a lot for subscribing. 1,700 subscribers, 1,500 likes, over 1,500 likes actually, and still 4K people watching. You guys are just amazing. All right, let's continue with track 3. Actually, supporting the developer ecosystem. Let me know in the chat when we should switch this off. All right. So we will be back in a few. We'll talk a bit about the price. I see some things about the price crashing in the chat. I would say don't worry about it too much. We had a really big run up today. It is expected that after the big show and nothing really gets announced, like Elon accepting Bitcoin again, that the price drops a bit. It's not a really big dump. Don't worry about it too much. I would say let's just enjoy watching this, and it seems like the trend is still upward, so nothing to panic about. All right, let's go. Have fun, guys.
Focus and coordination to continually support the development of the network. Today, Bitcoin is supported by a very passionate group of volunteer developers and distributed organizations, but its long-term success.
One last thing I wanted to say before we go back. Thank you so much for the $3 donation. It's really appreciated. Okay, let's go back to the video.
Hello, my name is John Newbury. I'm a Bitcoin protocol engineer and the founder and executive director of Brink, a nonprofit that supports open source Bitcoin development. Today, I'm going to talk about Bitcoin as open source money and more generally how that fits into a wider historic context of free and open source software. The Bitcoin network is developed and maintained by a decentralized group of contributors, and that open source ethos of Bitcoin is essential to its decentralization, to its censorship resistance, and to its neutrality as money. So we'll find out how. Before that, a little bit of context on free and open source software. So free software, well, in English, we have different meanings of the word free, but free software is generally considered to mean free like speech. You have certain rights around the software, and unlike proprietary software, those rights are that you can run the software for any purpose that you want. You can download and view the source code that makes that software. You can make modifications to it and potentially contribute those modifications back to the project to improve it. And you can redistribute that software however you see fit. Now, that's very unlike proprietary software, so Microsoft Word or Mac OS, where you certainly can't run it for any purpose you want. You're bound by the license that you own on it. You can't view the source code, you can't modify it, and you certainly can't redistribute it. Proprietary software is like buying a car where the hood is welded shut. If there's something wrong with the engine, you have no option to open and tinker around. You have to take it back to the shop where you bought it. And what that means in terms of the development and maintenance of open source software is that it's maintained by the public. There's no proprietary, there's no intellectual property moat around it. No one can make money off it by selling licenses in that way. There certainly have been successful businesses with open source software, but the way that it's developed is very different from that proprietary software. So a very short history of free and open source software. Well, there's been free software since people started writing software, but the modern free software movement can trace itself back to the mid-80s, the GNU project coming out of MIT, and the Free Software Foundation started in 1985. Fast forward a few years, and Linux was created by Linus Torvalds, and that attempted to be a Unix-like operating system. Linux is the kernel, and then the applications, the user applications on top of that is the GNU project. And so together, they create this operating system. And even if you don't use Linux on your laptop or your desktop, you use Linux every single day, because the vast majority of web servers use Linux. The Android phone in your pocket, if you have an Android, is based on Linux. If you're NASA and you're flying a helicopter on Mars, that runs on Linux. It's been a phenomenally successful project, and it is developed and maintained by volunteers, by contributors who don't get paid directly by Linux. In 1998, the Netscape browser was made open source, and this is when open source as a term first was coined, so free and open source software. And then in 2005, Git was developed, and Git is a distributed and decentralized source version control system. And in 2008, GitHub was launched. That's a web service that uses Git, and is where many open source projects are now hosted, including Bitcoin Core. So this is a kind of a bit of historic context, and Satoshi would have been very aware of all of this when Satoshi created Bitcoin, and also would have been aware of the many previous attempts to make private money, which generally failed because of centralization, because there was a single point that could be shut down. And so for a neutral free money, private money, to be successful, Satoshi knew it needed to be decentralized. And part of that is that it's open source. Anyone can view the code. They don't have to trust. They can verify themselves. And there's not a single point of failure that can be shut down. So what we know, Satoshi probably started working on Bitcoin in 2007. We don't know for sure because we don't know who Satoshi is. But from the writings on the mailing list and emails, we know that Satoshi was working on Bitcoin for 18 months, 2 years before it was announced on that mailing list. And then in October 2008, it was announced, the first public announcement of Bitcoin, shortly followed in January 2009 by the software, and it was open source. Anyone could look at that code and they could make modifications if they wanted. And it didn't take long, it took less than a year before the first new contributor showed up. And then a bit later, or over the next year or so, 18 months, 2009 through 2010, there were various releases, a lot of bug fixes, a lot of changes, until December 2010. So a little bit over a year after that first release of the software, Satoshi's last post appeared on the mailing list. And Satoshi was not seen again in public. So that's where Bitcoin came from. And then since then, the project has just continued to grow. In December 2010, Satoshi disappeared, and Gavin Andresen became the maintainer. So there was someone to pass that baton on to. Also in December 2010, development moved from SourceForge, where it was being hosted before, to GitHub. And like I said, GitHub is a very popular website for hosting open source projects. Many thousands of projects, many millions of projects are hosted there, hundreds of thousands of developers. And that's where Bitcoin Core is hosted today. In August 2011, the BIP process was formalized. BIPs are Bitcoin improvement proposals, and they're the way that the protocol gets changed. So the most recent examples would be Schnorr Taproot and SegWit, which many of you might have heard of. This is a way that the community can get together, discuss changes, formalize them, standardize them. Then in December 2013, Bitcoin, the project, the software project, was renamed to Bitcoin Core, and that established a difference between Bitcoin, the protocol, so that's the way that the different nodes speak to each other over the internet, and Bitcoin Core, the software project. And then fast forward to 2021, where we are today, Bitcoin Core has 6 maintainers, and over 800 people have made contributions to the code in that time. So that's quite a successful project. It should be mentioned that until 2012, no one was paid to work on Bitcoin. 2012 was when the Bitcoin Foundation was established. I'll talk a bit more about that later. But for many of those early years, those people were contributing their talent and their expertise free and were not getting compensated for it. All right, so in general, what is an open source project and what are the roles in it? Well, Bitcoin uses lots of very interesting technology, and so when we're thinking about changes to Bitcoin, that starts with research. So people discussing, analyzing, talking about different proposals that we can use to change the Bitcoin protocol. Another very important role in an open source project is maintenance. So we have contributors who write code and test code and review code. The maintainers are the ones who have kind of stewardship of the project. I should mention they're not leaders, they follow consensus, but they have the responsibility of merging code and making sure that releases go out on time. We have documentation, that's vitally important for a complex project like Bitcoin, so people are actually able to use the software. We have translations, so people in different countries can use the software who speak different languages. And of course, we have development. So what is development? Well, it may surprise you to hear that the number one thing that developers do is not write code, it's reviewing and testing code. Bitcoin is a security critical application. And if there are bugs in the software, then people lose money. And if there are very serious bugs in the software, then the whole economy could crash and there would be no more Bitcoin. So we take review and testing very, very seriously and spend most of our time on those activities. We find and fix bugs, and it may surprise people to know that there are bugs in Bitcoin. There are many bugs, and we find bugs every month. Some are more serious, some are less serious, but it's a software project created by developers, and so there are bugs, and there always will be. We just hope we find them before the bad guys don't. Another critical part of the work of contributing to Bitcoin Core is improving performance. So Bitcoin Core is a performance critical piece of software. We have this data structure called the blockchain, which grows ever larger all the time. And if you want to be a full node on the Bitcoin network, you need to download and process all of that data, validate all the signatures and so on. And so if we're not continually improving performance, then it will become infeasible to sync a new node or to stay synchronized to the tip of the blockchain. So we always need to be improving performance. As well as finding and fixing bugs, we want to improve security. So we want to make sure that we don't introduce new bugs or there aren't new attacks that can be carried out against Bitcoin. So we do things like testing, all different kinds of testing, fuzz testing, property-based testing, unit testing, functional testing. But we also look very carefully at things like the build system and make sure that it's not possible to insert bugs by compromising compilers or the tool chain or things like that. So that's a very active area of development and research. And of course, we add features. So what kind of features do we have? Well, all kinds. You may have heard that Bitcoin development is slow and boring. I don't think it's slow. I certainly don't think it's boring. We're careful, and so we don't rush into things, but there's always activity going on. And the most obvious example of a recent feature is the Schnorr Taproot soft fork. That's a protocol change. And there are many presentations and videos and podcasts about the technical details of that if you want to learn more. But from a high level, Schnorr Taproot will make Bitcoin more scalable because a Schnorr Taproot output is cheaper to validate than a pre-Taproot output, so we can have more of them in the blockchain. It improves fungibility and privacy because outputs look the same as each other. That's really important for a money. We want it to be fungible, so one coin is the same value as another coin. And there's all kinds of interesting functionality that can be built on top of it. So Schnorr Taproot will be activated in November, sometime around November 20th. And then it's down to the wallet developers, the service providers, the application developers to make use of all that really interesting functionality. So that's very visible. That's a very user visible change. Something that's maybe a bit less visible are the improvements in the peer-to-peer network. Now, the peer-to-peer network, again, is crucial for Bitcoin's decentralization. If we didn't have it, it wouldn't be a decentralized money. There would be a centralized server that could be shut down. So making sure that the P2P network continues to function properly is vitally important. And there's always lots of activity around improving it, thinking of researching different ways to improve it. One example is increased connectivity, so making the graph denser without unduly increasing the resource consumption of that peer-to-peer network. And that means it's more difficult for your node to be eclipsed or isolated from the rest of the network. If an adversary is able to do that, they could prevent you from seeing the blockchain, they could censor your transactions, they could do all kinds of things. And then network privacy is another area of research where we don't want people to be able to identify the source of transactions. And again, we have lots of small changes there and big changes, and it's an area of constant research and development. And many more. I should point out at this point that Bitcoin has bugs. Some people think that Bitcoin's finished, it's done. We just need to wait for hyper-Bitcoinization and all will be good. But in fact, there are always bugs in software. Bitcoin is a piece of software created by developers, and there are bugs. Many classes of bugs, some are more serious, some are less serious, but some recent examples or categories of bugs, you could have bugs where a malicious miner could create money out of thin air and therefore potentially inflate the supply of Bitcoin. There was such a bug in 2017. Obviously, if that continued or if it was allowed to be exploited, Bitcoin as a monetary system would lose a lot of value. And fortunately, that was caught and fixed before it was exploited. Another category of bugs might be denial of service bugs or remote crash bugs. Another category would be privacy compromises. So an adversary or spy being able to identify the source of a transaction. And another category of bugs is transaction propagation interference. So censoring transactions, stopping people from getting their transactions to miners. We've seen examples of all of these. They happen not all the time, but frequently enough that they need to be fixed, and we need to have developers looking at the code, fixing those bugs. So I've been talking mostly about Bitcoin Core so far, which is the most important project in Bitcoin. The name suggests it's at the core of the network, and if Bitcoin Core stopped working, then Bitcoin would stop working. So I think that's the most important project, but there are many, many other projects in this developer ecosystem. And I'll give you some examples here. One is libsecp. That is a cryptographic library that's used by Bitcoin Core for verifying and creating signatures. It's used by other projects as well for verifying and creating signatures, but it's a small project. It's developed and maintained by quite a small team of people, but it's crucial to Bitcoin Core and it's crucial to Bitcoin. So that's lower down in the software stack. It's a kind of a base library, and then you have Bitcoin Core on top of it. And then maybe going up the stack a bit, you have applications that are built on top of Bitcoin. And Lightning is an example. There are various different Lightning implementations. There are 4 main Lightning implementations and several other smaller ones, but the main ones are C Lightning, Eclair, LND, and then Rust Lightning or the Lightning Developer Kit. And those are all maintained and built and developed by different teams. You have various wallets. So here we can see Green Wallet, Blue Wallet, Electrum. Those are all open source and have different people working on them. Umbrel is a node in a box, essentially, where you can set up your Raspberry Pi or your server to install Bitcoin Core and various applications. And on top, again, an open source project that people are contributing to. The Bitcoin Dev Kit is a collection of tools and libraries for application developers to use to build their wallets and applications on Bitcoin Core, again, open source. And BTC Pay Server is a payment processor, again, an open source project. So there's a huge array of different projects in the Bitcoin space that are open source and people are contributing to free of charge. I'm going to switch back to Bitcoin Core now and give you a few statistics. So these graphs are all normalized with 2012 being set to 1 and various metrics. So if we look at this graph, we can see that between 2012 and 2020, the number of changes merged per year has roughly doubled, which is great. But even better, the number of reviewers has gone up by over 3 times, and the number of review comments has gone up almost 5x. So we're seeing more activity, but crucially, we're seeing more intense review and more scrutinization of those changes in the code. So that's all good. That seems like a good, healthy project. And then if I add just one more metric to this graph, which is the price, those other metrics are still on the graph. You just can't see them because they're so flat. The price since 2012 has gone up over 2,000-fold. Now, I'm not saying that we should have 2,000 times as many developers as in 2012, but we now have $1 trillion network, and I'd estimate around 20 to 30 developers working full-time on Bitcoin Core. So I would argue that probably at this point, Bitcoin protocol development is underfunded compared to the value that it's protecting. That said, the development landscape or the funding landscape for developers is a lot better than it has been in the past, and there are many organizations and individuals who are supporting Bitcoin development. The first was the Bitcoin Foundation that was established in 2012, and shortly thereafter basically dissolved because of political issues. It ran until around 2015. It was funding developers. I believe it still exists, but just no longer funds Bitcoin protocol development. And the developers who are being funded by the Bitcoin Foundation, I think, found funding with MIT DCI, the Digital Currency Initiative at MIT. And they have been funding 2 or 3 Bitcoin Core developers for about 6 years now. So they've done a lot of work to support Bitcoin. In 2014, both Chaincode Labs and Blockstream were established. Chaincode is a non-commercial private organization that funds Bitcoin developers. Blockstream is a commercial startup that nevertheless funded a lot of open source work in libsecp, in Bitcoin Core, in C Lightning, and still funds a lot of that work, as does Chaincode. In 2019, Square Crypto started. They've given out grants to many developers and designers, and also have an in-house team of developers working mostly on Rust Lightning on the LDK. And then last year, 2020, Brink was established, and we are currently funding 7 open source Bitcoin developers. As well as those organizations, we've seen several exchanges start funding Bitcoin developers, and that's great to see that they are supporting the underlying technology that makes their businesses possible. Zappo, OKCoin, BitMEX, and Gemini are amongst them, and it's great to see that. Okay, some challenges for those Bitcoin developers and the organizations funding them. I think as we see Bitcoin grow, a crucial challenge will be identifying and attracting the very best talent to work on Bitcoin. Bitcoin development is hard. There's a lot of very difficult technology. It's a mix of cryptography, peer-to-peer networking, security, all kinds of very difficult stuff, and you mix it all together. And you get Bitcoin. And we want to find the very best talent in the world to work on Bitcoin. Sorry, the very best talent in the world to work on Bitcoin. Another challenge is educating and mentoring those new contributors. Like I said, it's a very steep learning curve, and it takes a long time to establish yourself as a Bitcoin protocol developer. So that's a challenge. These developers are very talented and could probably go out and find very well compensated work in the private market if they chose to. And so retaining open source developers to continue working on Bitcoin and supporting them financially continues to be a challenge. And one new one that we started seeing recently is legal challenges. Sadly, several of the Bitcoin protocol developers are currently being sued on spurious legal challenges, and that continues to be a thorn in the side, and we hope that they'll get the support they need to continue the work that they're doing. Okay, so that's highlighted some of the challenges. For the rest of the day, you're going to hear from people who are facing those challenges and finding solutions to them. Next up, you'll hear from John Pfeffer, who is an investor who's been supporting Bitcoin open source development for several years. And he'll talk about why he supports Bitcoin and how he thinks about that support. After that, you'll hear a solutions panel from several of the organizations who are supporting Bitcoin developers, how they've overcome those challenges and how they think about that. And finally, you'll hear about how you can get involved and help. Okay, thank you very much.
Hi there, I'm Peter McCormack. I am the host of the What Bitcoin Did podcast. I'm here to interview my good friend John Pfeffer, covering the second session of supporting the developer ecosystem landscape. How are you doing, John?
I'm wonderful. How are you? Feeling better?
I'm good, buddy. Good. Yeah, feeling a lot better. Back's fixed, ready to talk to you. Everything's good, ready to do this. And do you know, I've known you for probably 3 to 4 years now. And one of the things I didn't realize about you straight away was how much support you actually give to the developer landscape to begin with. And that became more obvious later on as I got to know you more. And I just think it'd be a really interesting place for people to start is for you to talk about your background and interest and your investing thesis, but why with Bitcoin that has given you this imperative to support the developers?
So, I'm an entrepreneur and I built different businesses in different industries. And as the decades have gone on, we also, as a family, are more and more active investing across all kinds of risk assets globally. And when we first encountered, let's say the first encounter with Bitcoin was 2011, and frankly, it was just a little bit too hard for folks like us, I think, to get our heads around. But I had the good fortune of having coffee with my friend Vincent Casares in 2016, and he explained Bitcoin to me in very simple terms that I understood. It reminded me of all of our venture investments, which are, at the time, look. Money is a ledger for keeping up with what we owe each other. Bitcoin is a better technology for that ledger. It'll probably fail, but if it works, it'll be very valuable. And I said, well, that sounds like all the other venture investments we make. And that framework was enough for me to say, well, we're going to make an allocation and we'll figure it out as we go. And I've talked about it before as it was a ready, fire, aim investment. Something that because it's liquid, you can take a position and then evolve it as you go. That was in 2016, and then if you remember it all, the whole Bitcoin and everything else started going up into 2017, and as that happened, I had to dig in and learn more. Because it was growing as a position, and I needed to understand what we owned and what we should do with it. And it became one of the things that hit me was, and this was probably, maybe Q2 of 2017, it was that, well, this is a piece of software. This is free open source software. And that's really critical. Who's developing it? Who's writing the code? What happens? What if something goes wrong? Where is it going? And a mutual friend, organized a dinner with me, John Newberry, and Matt Corallo, both of whom are, well, John is speaking in this event, and Matt works at Square now and has been a key Bitcoin developer for a long time, along with John. And I remember at the time I was coming from a business environment and saying, well, so what's the product roadmap for Bitcoin? Tell me where, I want to see the product roadmap. What are we going to, where's Bitcoin, how is it going to develop, over what time frame, who's doing what, who's responsible? And they said, no, John, you understand, that's not the way it works. It's open source. Everybody works on what they want to work on. It's even somewhat adversarial in terms of how changes are made. We have to get consensus. And my initial reaction, coming from a normal sort of business mindset, was, what a mess. This is not a way to get something done quickly. But then, in the summer of 2017, and then with all of sort of the last 3 quarters of 17, we got into the block size wars and the forks and everything else. And I won't sort of rehash all of that there, but it was a learning process for me to really understand not only how important development was, but also the risks and how essential it is that Bitcoin development is consensus based. It's hard to make changes to Bitcoin, that Bitcoin developers are free to pull in different directions, that there are multiple diverse developers, multiple diverse funding sources. And 17 was a pretty brutal time. And come December, we'd just been through this really tumultuous year. And I was sitting there saying, my gosh, I really have to understand the development landscape better and the community, and make sure that it's, that if to the extent I can contribute, we can make it contribute to being healthy. And healthy, I had understood by then, meant, again, diverse funding sources that didn't get in the way of the developers, that didn't tell them what to do, and so forth. And Adam Back sent around an email suggesting the Great Scaling Initiative. And basically, we had this big war over block size, and block size was being used very inefficiently. And there were known practices that just simply hadn't been implemented by some of the big users of block space, and that needed to be implemented. He says, we ought to set up an initiative, get a couple of people to help educate some of the biggest users. And obviously we're talking here about exchanges and so forth, on how to most optimally use block size, block space. And I picked up on that. I said, well, that sounds like really interesting. Remember, I was still learning about all of this and didn't really know where to support and how to do it. And I said, well, that sounds really high impact and super important. So I forwarded the email. Both Vinces Casades and I were on this list, but I said, hey, Vinces, why don't you and I support this? Why don't we offer to fund this? And he said, great. And so I answered back saying, well, Vinces and I are going to fund this. Now what? And then it was crickets because someone had to step up and say, I'm gonna lead this. And a couple of months went by, and John Newberry stepped up, and that was the origin of Bitcoin OpTech. And that was kind of how it all started. That was the process. Was I went through this discovery of coming in with a very different mindset of how it, in my mind, ought to work, and really learning that no, in fact, it shouldn't work like I had in mind at the time, some kind of product roadmap and some kind of centralized top-down thing. And on the contrary, we needed a diverse developer ecosystem with different funding sources, and just set out to try to contribute to that.
Well, I'm also a contributor to dev funding at a much lower scale than you are, but it's always felt like a voluntary tax for supporting the network. That's how I've always felt it is. A lot of people from the outside might be following these sessions, John, and not realize that their imperative exists throughout the Bitcoin ecosystem. Whether you're somebody who just holds a very small amount of Bitcoin, or you're an exchange, or you're an investor like yourself, but there is that imperative to support the network because you do have skin in the game owning Bitcoin. But you clearly have that imperative. You felt like you should support the network. But can you talk a little bit more about why this means other people should be considering it as well? Because there are risks of not having enough developers.
Absolutely. Well, if you care about Bitcoin, there are different reasons to care about Bitcoin. One is because you believe in the movement. Another one is because it's an investment. Or it could be both. It seems to me fairly obvious that actually the heart of the issue is making sure this piece of software is stable, secure, and evolves, in a constructive way. I would argue it's kind of obvious that from a risk perspective, it's obviously the biggest risk. The biggest risk is inside. The thousands and thousands and thousands of lines of code that are being maintained and updated and so forth. God forbid something goes wrong. And you need a robust system to make sure that the way changes are made and so forth is well, again, extremely robust, and that Bitcoin moves forward, but in a very deliberate way. And I think that's inherent to Bitcoin as a store of value. Protocol stability and a very deliberate development process is essential. But it seems to me that for all those reasons, it's obvious that if you care about Bitcoin, it's in your interest to contribute. And then the question is how you want to do it. And there's so many different ways. And in some regards, I think, well, actually, I wouldn't even say in some regards, I think absolutely the diversity of opinions, the diversity of ways to do it, the diversity of sources adds as opposed to detracts. The fact that even different supporters may have slightly different tacks, that's healthy.
Yeah, I mean, that's a really good point, because one of the big newer contributors to raising funding for open source development on Bitcoin has been the Human Rights Foundation. And they specifically focus on issues relating to privacy. Big shout out to Alex Gladstein for everything he's done there. When I first started to become aware of this was a couple of years ago. I went down to Chain Code Labs in New York and I interviewed John Newberry. Interestingly, I also met 3 of the residents there. One of them was Carla. I spoke to her again today for the first time, which was amazing. She's now working at Lightning Network, working on LND. One of the interesting things, though, is since then we now have Brink, which is based in the UK because Chain Code is New York, but we also have the HRF. We have all these different strands of projects. It isn't just core, it is the Lightning Network, or it is privacy. And I think that's what you're talking about there, right?
Absolutely. By the way, I was remiss in not mentioning Chain Code earlier when I talked about Bitcoin OpTech, because John was working at Chain Code, and they very kindly made him available. And Chain Code are have been sort of the models for anyone who's supporting Bitcoin development for a long time. But you're absolutely right. I mean, in terms of really high impact, easy ways, I think those are some, Human Rights Foundation, and it's a charity. Anyone can contribute. Brink as well. I mean, when I say a charity, it's a U.S. registered charity for folks for whom that's relevant. Brink is also a U.S. registered charity. It's fairly straightforward. You can understand what they're doing. There are a few other organizations. There are other ways, like you can directly sponsor developers. We do that in a couple of cases, both on an ongoing basis or grants. That takes a little bit more. You have to be reasonably plugged in order to kind of know where to go and how to do it. And I obviously rely on the network that I've built up. Yeah, I mean, I think the more approaches, the better, and the different angles. Human Rights Foundation on human rights, as you suggest, and privacy and so forth. Brink adding a non-U.S. dimension, frankly, to a community that was a little U.S. heavy historically, et cetera.
Yeah, I mean, wouldn't it be great if we had a similar organization to Brink in?
Alright guys, since the stream is cutting out, let's talk a little bit about the price action. And then we will actually return to the stream. Camera. Let's see if we can get the stream back. Yeah, the stream is down for a bit, guys. I'll try to get it back on the site, actually. But in the meantime, let's talk a little bit about the price, and then we'll go back to the stream. It's no worries at all. I understand that most of you are here for the B word, so let me get my doc cam in here again. Let's talk a little bit about this price action. Yeah, so what have we seen today during the Elon Musk talk? We actually saw a lot of action during it. Like, I think the talk started around this time right here. We had a huge pump up, almost all the way until almost 33k. After which we got a dump down. And this dump down, you don't really... Yeah, you don't have to care about the dump down too much. I mean, it's understandable. Some people's expectations were really, really high. That they really thought that Tesla would announce something crazy. Or Elon Musk would announce something crazy for Tesla. That's just something that didn't happen. But that's okay. So the price went down, but after today, like where we started today, we went up a lot. Let's see if the stream is already back. Not yet, guys. I'll try to get the stream back as soon as possible. In the meantime, I already have my trading setup here on Bybit. I actually wanted to short around this time. Didn't have the guts. Well, it already went down too much for me to short. I'm using Bybit, by the way. If you guys are not using Bybit yet, it's amazing for leverage trading. I'm starting a 1,000 euro challenge on this channel. 1,000 euro is 1,170 USDT. Let's see if the stream is already back. If you're not yet on Bybit, you can use my referral link in the description. It would really help the channel, but I think Bybit would also really help you guys. Because trading on here is just so easy. You can easily use leverage, but only use this for day trading, guys. Don't use your whole portfolio on leverage trading. But Bybit is pretty amazing for leverage trading. So yeah, this balance that you see right here, 1,170, will be used for the challenge, for the 1,000 euro challenge. Check the stream. Not yet. And in this challenge, we will just try to grind as much as possible. Keep doubling our stack. By doing these speculative day trading on these charts. So like on a day of this, a lot of volatility, we will make some trading strategies and we will stick by them and see how far we can get. What did Elon say he owned before Dogecoin? I couldn't hear him. Did he say he owned something before Dogecoin? I think he only said that right now he owns Bitcoin, Ethereum, and Dogecoin. That's what he said. So maybe you're talking about Ethereum. Oh man, this is shitty. Okay, so track 2 works. That's weird. But track 3 is just offline. Through here? Offline. All right, bad luck. Let's talk a bit about the price. So now that we are here anyways. Let's talk about my macro outlook. So right now we are in a downtrend. There's no denying. We have had a really good day. So you see that this weekly candle is almost closing in the green, but we still have a lot of days to go. So I definitely can see this candle closing in the green. However, we can clearly see that still we are in the downtrend right here. And I want to be optimistic on this channel. However, this downtrend can't be denied. And some people are saying 24K. I don't see that exactly happening. So I do think we can have a spike up to the upper side, maybe to this weekly level here, and then have some downwards action, maybe to this 24K zone. I don't know where the bottom is exactly, and that's not what you'd like to hear for someone talking about TA. But what I think for the macro term is that we will stick around in this zone for a bit longer, and actually that we are pretty close to the bottom and we will have an uptrend again. Let's see, he's a thinker, not a talker. I think you're talking about Elon. Yeah, I agree. All right, let's see what the status of the interview is. Hey, I think we're back. If we have another break during the tracks of the B word, we will actually come back and talk a bit more about the price. For now, we can keep listening to the interview. And I would advise you definitely to sign up for Bybit if you want to do some leverage trading, open some longs, open some shorts. I will put a tutorial on the channel pretty soon. All right, let's get back to the interview. If we can, actually. Yes. Let's see.
So the Bitcoin developer community is very welcoming.
All right, we're back. Have fun with the interview. When this interview is over, let's talk a bit more about the price.
Incredibly important monetary network, and it holds itself and its community members to high standards, thankfully. But it's incredibly welcoming, and so to begin with, just start interacting with the community of developers. It's an open, if you're constructive and want to learn and are keen to be helpful, you'll find help in the community. Number one. Number two, more concretely, you mentioned Chain Code Fellowships is a terrific on-ramp. Brink is and John Newbury, what he's doing there, I know, is a terrific on-ramp. And I'm sure there are others that I'm and of course, once you're involved, you can then there's an ecosystem of grants and so forth that you can plug into. But I'm sort of going before that in terms of how do you learn, how do you get started, how do you figure out where to contribute, and sort of find your place. One other thing that I would say, one of the great ways to contribute to Bitcoin that we always need more of is code review. It's less glamorous than having your own commit, but it's incredibly important, and that's a way that you can get started, is trying to just be constructive and helpful in terms of reviewing code and making comments. Again, I think you'll find the developer community to be quite welcoming.
Well, code review is so important because we have a system here where we can't have any chargebacks. If you make a mistake or there's an error, we all risk losing our money. So, I mean, it's probably one of the most important jobs in the ecosystem because bugs can be critical. So, okay, another area I'm going to ask you about. You've been quite close to the developers for quite some time and how they're funded. How have you seen that evolve over the last 4 to 5 years?
Well, so as I said, we've got tons of new things. So we didn't like what did we not have? So I guess 4 or 5 years ago, as you pointed out, there was, in terms of the major polls, there was chain code, Blockstream, all this fantastic, MIT DCI, and you had obviously some independent developers. You had some developers employed by companies like Zappo, Vince's company, and so forth. And that's continued, but now we have many more developers being funded by exchanges, and, to work on Bitcoin, to work on what they want to do, whether on the payroll or through grants. But we also have Human Rights Foundation, we have Brink, we have Bitcoin Optech, different focuses, and others. I mean, it's not an exhaustive list that have sprung up. And I think that combination of new organizations with just more grants going on from companies in a lot of the grants, and then the organizations are often very philanthropic, is a lot better. And I think you put your finger on it. If I had to, there's so many different ways it could go, and frankly, part of the point is everybody should find their own way, and no one should dictate it. But if I personally had to say what I love to see now develop would be more Brinks, more chain codes, and so forth in different geographies, with different perspectives.
Well, it's an interesting evolution, right? From an original group of decentralized developers to some kind of structure around those, to having essential charitable institution managing devs, to onboarding people, to now distributing those around. But there's even an imperative just to talk about it. I mean, if I make a show about funding developers, it would be one of my lower performing shows because people don't really want to hear about that. They want to hear the moon talk. But I even feel like I have an imperative not just to contribute myself, but to even talk about it, to have John Newbery on the show. I'm actually going to be doing what happened is when I interviewed John at Chaincode, did a 15-minute interview with Amiti, who you probably know,
yes,
Carla, and Fabian, the three of them, for 15 minutes. They're all now working on Bitcoin development. So we're going to do a reunion show, and they're going to be talking about their experience. But I feel like us podcasters, the journalists, everybody in the space has a duty to cover this, to make it a topic that never leaves, that would never, because John, the real question is what is the maximum amount of funding we need for developers?
Wow, gosh, that's how long is a piece of string? That's a really good question.
Exactly.
I think, interestingly, there's probably a balance. Bitcoin, in theory, so Bitcoin, protocol stability is really important, right? I didn't mean that in that. Without a doubt, protocol stability is very important, and therefore, in theory, there is an upper bound to just how much change you want and how much time, and therefore how many different inputs, and as a consequence, maybe somewhere how much funding. I don't think we're there. I mean, I think that we're still in a place on the curve where more funding and more developers, especially more, increasingly diversity developers, geographic and otherwise, would be beneficial. But there is an upper bound. I don't think interestingly, it doesn't take crazy numbers. It's not like we need 10 times more would be my guess. I mean, I didn't get 10 times more. I don't know. It could even be counterproductive. It's not an order of magnitude of increase, but we need to maintain what we've got, and we could probably, double it, triple it. But
that's interesting,
without things getting out of control. Sorry.
But that's interesting because I thought you would say there's never an amount, there's too much, but perhaps you're right.
Well,
and another thing I would just...
Yeah.
I mean, another thing I would say is interesting, just as somebody who's made small donations myself, is that it's given me an imperative to learn more about developers and development, and ultimately, therefore, increase my knowledge of Bitcoin. And I'm assuming it's done the same for you.
That's, well, for sure. I mean, I've learned so much through getting to know developers and what they're working on, following their work. You know, the whole point of it is I have no influence on what they do, but I learn so much, and it gives me a chance also when I don't understand something. I know who to call. I can say, can you explain this to me? Why is this important? What does it mean? And it's incredibly enriching, and it's just a fascinating. There's so many. Bitcoin is fascinating, the more you get into the detail, actually, the more fascinating it gets.
Yeah, I can agree more. The last 5 years of my life have just been the most incredible journey of learning, and I take a long time to learn these things. I also think it's quite funny after knowing you for 3 to 4 years. This is the first time I've actually interviewed you, John, which is
I know,
hilarious.
We've been talking about it.
I can't believe. I know, and here we are. Well, listen, look,
here we are.
We're getting close to the end of close to the end of the session. If you wanted to say one last thing to, who've got skin in the game, they've got Bitcoin, they've never actually supported the ecosystem of developers yet. You want to say one last thing to them and point them in a direction? Let's do that now.
Well, I would say, first of all, just like getting off zero with Bitcoin is the first step, right? That owning zero Bitcoin is the wrong answer, and then it's a question of scaling. And similarly, I think if you care about Bitcoin, whatever your focus, development is key. You should, I think, seriously consider making a contribution. If you know how to code and you're passionate about it, maybe do it as a developer. Or if you know how to code and you feel like you want to organize something, go start up a chain code or Brink India, et cetera, as you suggested. If, like me, you don't have any particular skills or talent, but you have the ability to provide funding, get started. And I think the easiest way to do it is via the organized charities, some of which we mentioned earlier. And through that, you'll begin to learn and network, and find your way around. And as you do that, I'm sure everyone will find her or his own way to focus and who they want to support and so forth. But that's probably the easiest thing to do out of the box.
Cool. Well, I'll finish off a little bit more direct. If you've got big Bitcoin funds, especially if you're a company in the Bitcoin space and you're not sponsoring developers, you really need to pull your finger out. If I'm giving more money than you, then that's an embarrassment. Pull your finger out, support developers. And I also think, look, check out Brink because they are newer. Check out a Human Rights Foundation, Alex Gladstein, because they're also newer. They're doing some great work. John, always love seeing you. Hopefully I'll see you again in person this year, and appreciate your time in this. And also, look, just a massive thanks for everything you've done for Bitcoin as well, and the money in to support developers, and appreciate you, man.
And thank you for all you're doing, and glad to see you back on your feet.
Thanks, brother. Cheers. Bye. Thanks, everyone.
Bye.
All right, so a 2-minute break, guys. What do we think about the whole event so far? I think it's pretty cool. I like the event. Yo, James, I think mainly it was a lot of hype for this event. And after Cathie and Musk actually talked, some people were disappointed, I think. I think that's the reason why prices are falling off a bit. It's only a bit compared to where we were yesterday. Has anyone figured out what platform they will use to get the best results in mining? I actually don't know that. Sorry, man. Alright, let's see. Like I said, guys, if you want to do some trading based on news, based on TA, and we're doing a lot of TA on the channel. You can, this is a shameless plug, but you can actually use Bybit. I use Bybit a lot. We will use it for a 1,000 euro challenge, and a referral link will be in the description below. So if you sign up for this and have a good trading volume, we both get, I think, up to 600 euros for free from Bybit. Actually, you will get 600 euros. I will only get a bit. We don't both get 600 euros. They're not that generous, but they are very generous for new users. And if you use my referral link, you can get up to 600 euros for free. So it's pretty cool. Seems like next up we're going to the solutions panel. I don't know these names personally, but I'm sure they can actually offer a great talk. Let's go back into the interviews.
And I have the pleasure of speaking with folks across the ecosystem who are supporting open source Bitcoin developers and contributors. So let me introduce you to some of our panelists. Hong.
Hi, everyone. My name is Pong. I am CEO of Bitcoin. Nice to meet you all.
And Beth.
Hi, Beth Curtison here, Managing Director at Gemini.
And Connor.
Hello, I'm Connor Okus, Product Manager at Square Crypto.
Great. So we have a lot to get to in a short period of time. So let's start with Hong. And as the CEO of a global exchange, you have a ton on your plate. And yet, whenever I see you make an appearance, you're talking about the importance of Bitcoin developer funding. And so given your previous experience.
And that was kind of the birthing moment of Gemini Opportunity Fund, which has been a great opportunity for me to run at. Being that I worked so closely with Cameron and Tyler in those early days, I often get tapped for some of these special projects that don't fall under one team or one division at the company. So it's been a true pleasure to run at this, and we've now funded over $1.5 million worth of projects or developers.
Jonas, you and your team and the community and Square Crypto to help us with that. As long as we figure that out, we feel pretty comfortable. And I think when we think about ROI, it's more about making sure that there are actually more than us, more than who has already been in the space to support it, because we know it's important, it's critical.
Well, let me change the question a little bit for you then. How do you budget this?
We set aside some budget based on our own revenue and what we can afford to do on an annual basis. So right now we have we are allocating $500,000 a year to do that. Maybe later on when we grow bigger, we can do more on an annual basis, but this is what we currently have.
Great. And Beth, you spun this up from scratch. What was that process like, and how did you, again, justify this across the different verticals across the...
Hey guys, it seems that we are back. I hope it actually stays this way this time. Thanks for the 500 people that are sticking around. You guys are awesome. Let's continue to watch this talk. I think it's a bit interrupted now, but let's see how far we get. Thanks, guys.
Piece that Gemini felt the need to show up and be a part of and support the ecosystem. So, and it seems it's the same way at Square Crypto. It's the CEO is leading the way as far as what's important to them. So really, we're just trying to support what's already happening in the community and just find a way to fund these projects and these people quickly and seamlessly. So that helps.
Yeah, it helps to be CEO, I guess, and or to have the CEO supportive at least. Connor, Square Crypto is a little bit different than I think that otherwise exists in the ecosystem, and Hong and Beth are looking for folks to fund externally, but Square Crypto has this internal team and somewhat of a partition team from Square itself. Could you tell us a little bit about that structure and maybe I mean, I think there's some obvious advantages there, but just sort of articulate sort of how it works.
Yeah, sure. So I think, yes, speaking of CEOs, there's no secret that Jack Dorsey is a big advocate of Bitcoin. And so around 2 years ago, felt the need to give back and contribute back to this this platform that we're all building on, and recruited a full-time team to work on open source Bitcoin projects. So the team is made up of 4 developers, 2 or 3 product managers at this point. The focus is ultimately just to improve the Bitcoin ecosystem and help to empower individuals economically. And so it's just a way to give back to the open source community, and it's very much aligned with a kind of Square's larger goals of being interested in a more accessible global financial system for all. And so the way we kind of help to improve the Bitcoin ecosystem is through our own work and the support in the work of others, which I mentioned previously through the grant program. So our own work includes building out the LDK, the Lightning Development Kit, which is a tool designed to help applications easily integrate Lightning. We deem Lightning to be the preferred method of scaling for Bitcoin, and how we're going to make it become more accessible to everyone all over the planet, and hopefully a global currency for everyone to use on a day-to-day basis. And so we have 4 developers primarily contributing to that. And then the other side is obviously the grant program, where we fund different types of projects and individuals. But we're very much focused on mass adoption and Bitcoin becoming a global currency for all. But I'm sure there's institutions and there's companies that are going to be watching this, where perhaps like a store of value proposition is more in line with their business interest. And so perhaps funding projects that are more focused on security, for example, might align more with what that institution is doing. And so regardless, it's just important to kind of get involved, lean on the kind of companies that have already found their mark in contributing in this way in the space, and ultimately just help improve and move the ecosystem forward as a community.
Beth, has there been anything that's been really surprising from the last few months of spinning up this program and getting to know the ecosystem?
Yeah, I think from a positive perspective, I mentioned this before, but the community has been so approachable and willing to help out, to put you in touch with different devs or different projects that are going on. So that's been really refreshing, I think, because you don't necessarily see that in all industries or all communities. So I've really been grateful for that. I would say we definitely have some work to do when it comes to the administrative efforts of onboarding devs or projects or getting the funding to them as quickly as possible. Obviously, Bitcoin was created to solve that specific problem for the world, and I think we have some work to do there. But we're working through the kinks, and I think we'll be in a better place soon. But the basics of sponsoring a dev, for example, there's some open source tools out there, but I think we can continue to open up the ecosystem and help other exchanges or other companies have kind of a blueprint of how to do this quickly and seamlessly to get more funding to these projects.
And Hong, as a global leader for an exchange, what's sort of the most misunderstood aspect of supporting this free open source Bitcoin development? I mean, do you get questions from other leaders who are interested? Like, how do you sort of speak with them about it?
Yeah, I think the two takeaways that we've got over the last 2 years are, number one, when we support individual developers and projects, we also realize that those efforts are extremely hard to scale because finding those individuals and projects take time and take a lot of community input. And at the same time, the Bitcoin developer community also in itself has a lot of bottleneck that need help externally to work through. For example, PR, bottleneck, and maintaining work. Those are things that we hope that we can do a little bit more work together with the community to figure out how we can actually help and make the overall supporting work more scalable. And then the second thing that surprised us a little bit actually was a recent survey that we did with our customers, with our own customers, about developer sponsorship. And it turns out that actually 80% of those who have been surveyed actually don't know how a Bitcoin developer is being supported. 30% thought that actually they were paid when Bitcoin transaction happens naturally. And then another 30% think that miners actually pay them, which would have been nice. But once they realize that actually the Bitcoin developers actually work on themselves and they need to find their own financial support or just allocate their time part-time to this work, then most of them, 80% of them actually are willing to participate in this in one way or the other. So I think that raising that level of awareness in general would be quite helpful to the ecosystem. So those two are kind of surprising to us over the last two years journey.
And Connor, I guess, how do we make sure that this grant program and this kind of support remains decentralized? We don't want people ask Chain Code all the time, when are we opening an office in X country or X continent? And it's not going to happen. But so how do you think about decentralizing the funding and support for these devs and other contributors?
Yeah, so I think companies and institutions just have to get involved. I think they all have, a vested interest in seeing the success of Bitcoin, and the more you contribute, whether it be through funding or through development, design, whatever it might be, increases that probability of success. And Bitcoin is something that's going to keep improving over time, and there isn't just sort of one way to contribute. At Square Crypto we have the grant program. Chain Code looks at a more educational approach. The Human Rights Foundation and Brink take a slightly different approach as well. So if we can just continue on in that vein of having more and more organizations contributing in the way they see fit, leaning on current organizations that are already in the space, and if we can get to, I don't want to pull a number out here, but 25, 50, 100 organizations all contributing in different ways, to me that feels like a good place to be in. So it's a long journey, but I think we can get there, and we're starting to see lots of different types of organizations show the enthusiasm to want to contribute. So that's the main thing. So just get involved is the kind of TLDR really.
And in that vein, and I think as the closing question, we'll go around the horn here. Beth, can you tell us maybe what you would suggest for an organization that's interested in getting involved?
Yeah, I think to Connor's point, get involved, tap the network. Like I said earlier, everyone seems to be pretty approachable in this community. So reach out, to the folks at Brink or at Chain Code. Maybe you can give them your email, Jonas, and reach out and connect. That's how I started. That's how I got educated. I'm still learning every day, and I think it's a really, really great group of people that will help push you in the right direction wherever you need to go.
Hong, same question to you.
Yeah, I would echo the rest of the panelists. My DM is open too, and I've got a lot of support and help from you, Jonas, and the rest of the community. So we're here to help. And by the way, this is the area where we actually see exchanges partner up, right? We have partnered up with other exchanges previously on sponsoring, and Amity now goes to Gemini too. So this is an area for everyone to really help help us grow long term, because we really need to invest in the foundation, invest in the fundamentals of the industry, so that it's not a bubble by the end of the day. So just get into it.
Connor, close us out.
Yeah, I don't have much more to add, but I'd say, yeah, identify kind of where you'd want to contribute, because there's so many different areas to contribute. Maybe that start there and identify what it is and what area you want to contribute to. And like the panelists have said, like the people working in the Bitcoin ecosystem are ever so lovely and ever so friendly. And so we'd love to kind of hear from you and help in any way we can, really.
Well, thank you all for your thoughts. And yeah, I think echoing the sentiments of everyone here, we'd love you to get involved. Please do reach out. It shouldn't be too hard to track us down. So thank you all for joining. And I think that's it.
Thank you.
Alright, after some outages in the stream, we are actually back. Pretty good, pretty good. In 2 minutes we're going to the next section, which is a call to action, which is the last session of this track. I don't think we have the time to... Let's do this. I don't think we have the time to go over all the remaining tracks, because it literally takes another 6 hours, and since I'm in the Netherlands, it's getting pretty late around here. We will finish this track though. Looking at the Bitcoin action right now, since Musk and Cathie Wood have talked, and Jack Doherty, we actually went down a lot. It seems like we're bottoming out right now. We found some support here. Might not be a bad place to place a long right now. I'm not in any position. But I do think we have found some support. Yeah, this is a pretty critical zone. Maybe a little bit more downside, but here this seems like a pretty good support zone where we can bounce off. Or maybe consolidate for a bit. That sounds fine. If you're wondering where I'm trading on right now, this is Bybit. Shameless plug right here, since we have a lot of viewers. If you want to trade on Bybit, you can use leverage. You also can't. You can also now do spot trading on Bybit. I recommend it a lot more over Binance. During these downtimes where there's a lot of volatility, it just performs. It's there. It's always online. And those are the times you need it the most. So if you're on Binance and want to try out something new, try Bybit. You can actually get some free money. I think up to $600 if you trade with volume on Bybit. And I think to get your first money, you have to have $1,000 in volume. So that's not deposited, that's in volume. So even if you have like $100, if you do 10 trades with that $100, you already apply for those, those free money that you can get. I don't know the exact amounts. You should check out the terms and conditions on Bybit. However, I really recommend this platform, and it's a way to support the channel if you use the link in the description. All right, let's get back to the conference, and let's let Bitcoin pump up a bit. All right, so this guy's back, and let's go to a call to action, which is probably going to ask you all to continue or start contributing to the Bitcoin development. Let's go. Or not. Its track has ended, actually. Oh, this was already a call to action. Alright, that makes sense. This track will be available shortly. Alright. But it isn't 222 PDT yet, right? Let's go to PDT time. No, we're a bit early,
co-founder at Brink. Brink is a not-for-profit.
Let's see. So this is track 4. Let's go to the previous track.
Through funding education, and mentoring.
Interesting. Now it's actually working. Okay, let's listen to this guy, probably the owner of Brink. Let's go. Have fun, guys.
Developers. And we also have a more novel fellowship program that is a one-year in-person training program to onboard new Bitcoin developers. As everybody knows, Bitcoin development is notoriously difficult and development talent is scarce. And so this fellowship program, we think, will help onboard new promising developers to the projects. So why Brink? Well, we're a 501c3 organization, which means all donations to Brink are tax deductible. And due to some generous sponsorship provided by our founding sponsors, 100% of the donations go to our grantees and fellows. And all of our administrative and upfront and administrative costs are taken care of. We're funded entirely from individuals and organizations that are looking to support the ecosystem. The service that we provide our partners and our sponsors are turnkey in that Brink finds, vets, and mentors developers. We also handle all of the administration, the legal, the visa, and other requirements for donations, and also any sort of travel logistics or travel-related expenses in getting fellows to our office in London. And we're exclusively focused on the Bitcoin and Lightning ecosystems. We have a strong track record in terms of individuals on our team. We have hands-on Bitcoin core development experience in-house. And we also have years of mentorship, training, workshop, and educational resources, specifically in the Bitcoin space. A little bit more about our team and our backgrounds. So my co-founder, John Newberry, he's a core contributor since 2016. He also co-founded Bitcoin OpTech, which is an educational resource for developers and folks in the ecosystem. He started the chain, or he worked on the chain code residency. He founded the Bitcoin Devs Meetup in New York, and he's also the PR Review Club organizer. Myself, I'm a contributor to the OpTech newsletter, and I also organize and present at various workshops and events in the ecosystem. Anthony Hodge has worked since 2014 at cryptocurrency nonprofits, and she heads up our operations efforts. And on the board, we have Dave Harding. Dave's a prolific Bitcoin technical writer and educator. He co-wrote the Bitcoin.org developer documentation back in 2014 and 2015, and he's also the principal author of the Bitcoin OpTech newsletter. Jerry Burrito is executive director of Coin Center, and he's testified several times in Congress, and he's been published in the Harvard Journal of Law and Public Policy, Stanford Technology Law Review, as well as Wall Street Journal and the New York Times. And Carla is a software engineer at Lightning Labs, and she works on the LND Lightning Network implementation and also associated infrastructure projects. She was a resident at the Chain Code 2019 residency, and she brings Lightning expertise to our board. So along with myself and John, Dave, Jerry, and Carla make up the Brink board. So with our strong team that we've put together, also a stellar grants program. Our grants program is targeted to be long-term. Long-term grants are more sustainable for the developer versus piecemeal, sporadic donations that happen maybe online, can fund a developer for a month, and then they don't know where their funding is at for the next month. So we're targeting those long-term grants to allow the grantees to really focus on Bitcoin and related development work full-time. They're also independent grants in that a developer can work on whatever they choose to work on within their expertise, and they're not being told what to do or necessarily how to do it by Brink. As mentioned previously, we have a strong technical and experienced grant committee that's made up of the same board members that I mentioned previously. And so we're vetting the best and most impactful projects and developers in the space that will have the biggest contribution. We funded Jesse, who is an ex-Coinbase alum, and he's working on key management. Alikos is working on Bitcoin Development Kit, which is a kit for wallets to more easily implement Bitcoin into their wallet software. Habasto is one of the most prolific Bitcoin Core developers. He has a ton of Bitcoin Core and Bitcoin GUI commits. And we've also just recently announced Larry and Sebastian as our second round of grantees, and they're focused on code review and testing. For more promising but less experienced developers, we have the fellowship program. And that fellowship program is a year-long focus on Bitcoin development, and it's on-site in our office in London, and mentored by my co-founder and longtime Bitcoin developer, John Newberry. And it builds on his experience organizing the chain code residencies and also mentoring new contributors over the years and running the PR review club. And there's a few different organizations that are doing traditional grants, but we really think that this fellowship is completely unique to the industry and furthers onboarding new talent to the ecosystem. Right now we have Gloria Zhao, who's actually in London and has been there for a couple months, already contributing very valuable work under her package relay efforts. And we've just now have a second fellow whose contract is just recently signed and we have not yet announced, and this person hasn't started yet, but we're excited to announce soon. None of this fellowship work or grant work would be possible without contributions from our founding sponsors. Entrepreneur Wences Casares and investor John Pfeffer, who contributed initial funds to get us off the ground and fund us for the first few years in terms of our operational and legal expenses and upfront expenses. So we thank them because it's their faith in us, but more importantly, their belief in the value of investing in developers that got us where we are today. And so where are we today? Where is Brink today? Well, Brink has $3 million pledged in just over 9 months of operation. And as we've seen, we've already funded 5 grantees and 2 fellows. And while we're all very happy about that and the money that we've received, we think we're just getting started. So who's contributing so far? Well, we're happy to have some of the biggest companies in the industry contributing to our mission and donating for our grants and our fellowship programs. In addition to these names that you see on the screen, we also have donations from smaller organizations and individuals who have donated as well. So if you're interested in what we're working on and what we're trying to achieve here, feel free to subscribe to our Brink email newsletter, where we talk about what our fellows are working on, what our grantees are working on. We announce new rounds of grants recipients and fellow recipients and keep everybody updated with the development ecosystem. Likewise, you can follow Bitcoin Brink on Twitter, where we have similar updates. Feel free to reach out, donate at brink.dev to chat about how we can partner together to further the development ecosystem and fund additional projects and developers in the space. We also accept online donations on our website, brink.dev. And because we're a 501c3 organization, we are also eligible to be listed under donor advised funds. And so if you don't see Brink listed under your donor advised fund, feel free to reach out and we can discuss that as well.
I assume this droppage is due to it being the end of this track, I guess? Chica,
thank you for your time and consideration, and we hope to hear from you.
I wanted to ask what you mean with Sivotinho.
Hello, everyone. My name is Neha Narula, and I am...
Never mind, it's going on. Have fun, guys.
The MIT Media Lab. So what is the Digital Currency Initiative? We engage in Bitcoin and digital currency research and development. We're housed at MIT, and we primarily focus on unsolved challenges in security, scalability, and privacy. So I want to talk about digital currency and where we are for a second. It's not done. We're not done building Bitcoin. There's still a tremendous amount of work to do, and there's still really fundamental challenges that we need to solve in order to do that work. And part of what we do at the DCI is engage in the deep research to get that done. So why MIT DCI? There's so many organizations you're going to hear about that support Bitcoin and Bitcoin development. Well, we're really here to address some of the fundamental digital currency challenges by conducting long-term research. We have been around since 2015, and we have been supporting senior Bitcoin developers since then. So we are a neutral long-term home for senior developers. And we're also in a unique position to leverage the MIT ecosystem of experts in economics, security, distributed systems, cryptography, and more. Our mission is to empower individuals by making it as fast and easy to move value across the world as it is to move information. And surprisingly, that does not mean we just work on Bitcoin. So in 2015 and 2016, we hired 3 important core maintainers and developers, including the lead maintainer. And MIT became the first university to employ core developers and to really put its stamp on Bitcoin as a research-worthy, important protocol. In addition to that, we started doing some work on central bank digital currency research in 2016. In the intervening years, we have worked on really important projects like bringing smart contracts to Bitcoin, disclosing vulnerabilities, publishing ideas that can help scale running Bitcoin nodes, implementing really important monitoring to make sure that the Bitcoin system is running the way that it's supposed to be running. But in addition to that, we are in a unique position to talk to governments and lawmakers and other folks in the public sector to help explain the technology and work with them to understand digital currency better. And what we're doing this year is we're actually launching something completely new, which is focused entirely on Bitcoin security. So let me tell you a little bit about why we're focusing on Bitcoin security. So Bitcoin, like I said, is not done. It has some really unique properties that make solving challenges in Bitcoin pretty hard. So first of all, it's 24/7 global access for everyone. Anyone can join the network, anyone can start mining, anyone can go and look at the code, which is posted online. There's no undo or rollback. There's no system administrator or master key holder. So if something goes wrong, there's nobody who can go get your coins for you. That's just a done deal. This is decentralized open source software. That means that there isn't really a leader or a manager. There isn't a roadmap that the developers are necessarily following. This is all done in a decentralized manner. And then to add to that, attacks are easily monetizable. So attackers can almost anonymously make off with a lot of value in certain situations. So when you put all 4 of these things together, you are in an incredibly challenging adversarial environment. And that's the environment that developers are working in. And that's the environment where we need to address issues like privacy, security, and scalability. And what we're seeing now is that Bitcoin is entering a new era, an entirely new era. It recently surpassed $1 trillion market cap before coming back down. There's a very big upcoming shift that's going to happen in a few months and years, which is going to be a big change in the network security and economics around Bitcoin. That's the transition from block rewards to transaction fees as the primary way of rewarding miners. In addition to that, we have a very passionate group of volunteer developers and distributed organizations which fund full-time developers, and we have a really healthy grants ecosystem, which is fantastic. But I would argue that that's not going to get us where we need to go. We really need to think about implementing long-term processes and long-term thinking and long-term homes. It almost requires the amount of time it takes to get a PhD to get really up to speed in Bitcoin. There are very few people around the world who are able to do solid code review and to really understand all the intricacies of the network. And we need to think about putting processes in place to continue to build that capacity and create more of these people and make sure that they have a home. So that's why we are starting this security initiative. We have the following goals. First of all, we want to maintain a long-term senior team. So we're trying to build out a senior team of developers and research scientists and provide a long-term home for these people. In addition to that, we want to focus on work that is really going to find and prevent layer 1 bugs. So things like removing risky code dependencies and researching safer programming languages. We want to investigate, monitor, and deter. So that involves things like conducting code audits and researching the long-term economic security of Bitcoin. And finally, we need to improve automation. We need to decrease reliance on scarce experts and also identify and circulate best practices. So these four things are a big part of the security initiative that we are launching at MIT. We already have a lot of really great contributors, but we are looking for more. So this is an excellent opportunity if you want to make an investment in the long-term success of Bitcoin. Our goal here is to help bring Bitcoin's global security infrastructure up to par with a system that is actually capable of guarding $1 trillion market, no matter what is thrown at it. So I want to tell you a little bit about some of the folks that we have at DCI. In addition to myself, we also have Vladimir Vanderlaan, who is a Bitcoin core developer and has been the lead maintainer for over 5 years. Taj Dryja, who's a research scientist. He's a co-inventor of the main scaling solution for Bitcoin, the Lightning Network, and is doing a lot of really important work bringing smart contracts on top of Bitcoin. Corey Fields, another longtime Bitcoin core developer. His expertise is in the build systems and peer-to-peer networks and security. And Madars Virza, he's a research scientist with a PhD in cryptography from MIT. He's a co-author of the Zero Cash paper, which was the predecessor to Zcash, the cryptocurrency, and has done a ton of work in zero-knowledge proofs. So that's the current DCI technical team. We're looking to expand this team to build out the security initiative. But being at MIT, it's not just technical leaders. We also have an amazing group of advisors drawing on the MIT ecosystem. So that includes folks from Sloan, like Simon Johnson, former chief economist of the IMF, Rob Townsend, an economist, Ron Rivest, who invented a lot of the really important cryptography that we're using in these systems today, and Deb Roy, who does work in decentralized networks and is a leader at the Media Lab. We were really lucky to have some core important people in the ecosystem as part of our advisory board while they were at MIT as well. That includes the current chairman of the Securities and Exchange Commission, Gary Gensler. We're sorry to lose him, but he's a former advisor at DCI, and Christian Catalini, who is one of the co-creators of Facebook's Diem. So those are former advisors at DCI. We're really lucky to be in a place as vibrant and exciting at MIT, where we get to work on Bitcoin and bring students and faculty and researchers into our world, help share with them some of the really fundamental problems that we're going to need to solve in order to bring Bitcoin to the next level. If you are interested in supporting our work, here's how you can get involved. You can go to our website, dci.mit.edu, which will show you how to donate and become a part of our network. You can send us an email at dci@media.mit.edu. We host regular roundtables on Bitcoin security, where we bring developers together with investors to share insights about what is happening inside the Bitcoin network and where things are going. So we would love for you to be a part of that as well. So thank you very much.
Hey everyone, my name is Alex Gladstein. I'm the Chief Strategy Officer of the Human Rights Foundation. Very happy to be with you today and want to take a moment to talk a little bit about our Bitcoin Development Fund and how we can help push for more open source development and creativity and innovation in the Bitcoin space. The Human Rights Foundation is a nonprofit based in New York City, founded in 2005. Our goal is to promote civil liberties and political rights around the world, especially for people who live under authoritarian regimes. Today, about 4.3 billion people across 95 countries live under different kinds of authoritarian regimes where they don't have the same rights and privileges that we may have in a country like America. And at HRF, our programs range from legal defense and advocacy for political prisoners to conferences like the Oslo Freedom Forum that bring dissidents and journalists and activists together with people from different industries to make a bigger dent in the fight for freedom, to technology programs like flash drives for freedom, which actually help outside information get into closed societies like North Korea, where people don't have access to the internet. We're led by a board of esteemed international human rights advocates like Gary Kasparov and former political prisoners from many countries. And our work has an impact annually of reaching many, many millions of people around the world. Now, we do this in a couple different ways. First of all, we have this idea of partnering directly with activists on the ground, so that we're basically supporting innovators who kind of indigenously know what they're doing. We're not coming in with like a big outside idea. We're listening to what they have to say, and we're trying to support them in that particular way. And we give them the stage. We give them grants. We seek to figure out what works best in different places, and then support that from however we can. And we've always had a strategy of relying on technology to do so, whether it be training activists on how to stay safe online, or as we'll get into, learning about the power of Bitcoin. The important thing to understand is that Bitcoin is very closely tied to human rights. Hundreds of millions of people around the world suffer from closed bank accounts, devaluation, demonetization, censored payments, financial isolation, broken infrastructure. They don't have a lot of the fintech that we have. They don't have a lot of the rights and abilities that we have, and it's often hard for them to actually store their value in time and money in a money that's going to preserve value, whether it's over time or space. These things are not really accessible to many, many people. So Bitcoin's a game changer. It is, as you've probably been learning, this open network that allows anyone to connect, that provides bridges and not walls, and that allows for the instant transfer of value in a totally parallel way to the existing legacy system. And this is just so important for like the billions of people who live under authoritarian regimes, or for the 1.2 billion people who live under double or triple digit inflationary environments. And at the end of the day, Bitcoin is this just like remarkable empowerment tool. So the question is, how do we activate that, right? Well, we've chosen to focus on 3 areas at the Human Rights Foundation. First of all, public education. So we do a lot of talks like these. We do a lot of writing. We do a lot of podcasts. We do a lot of presentations at conferences. We try to really get the word out about, this sort of the human rights implication of Bitcoin. The second thing we do are trainings. So we will actually run, whether they be virtual or in person, workshops and academies to help activists learn about Bitcoin if they wish. Of course, it's a voluntary system, but if they need it, we want them to understand how to use this tool because it can be very powerful. And the third thing that we do is most relevant to us today, and that's support the open source Bitcoin ecosystem. And then we do that through the Bitcoin Development Fund, which we launched about a year ago in June of 2020, mainly to do what we can from our side to contribute to Bitcoin to make it a better tool for human rights activists. I mean, that is our primary goal. We want to make this thing more usable, more private, more decentralized, more accessible. We've given out a bunch of grants so far, totaling north of $750,000 over the last year. Some of the recipients are working on Bitcoin Core, like Gloria Zhao, for example. Some of them are working on new privacy implementations, like Chris Belcher. Some of them are working on the Lightning Network, maybe someone like Fode Diop. Some of them are doing translation into different languages, like Arabic Hodl. Some of them are even just doing general education about the space, like Janine, or contributing from different places around the world, like Calvin, who's a Bitcoin Core contributor from Korea. If we look at other examples, we're supporting also teams. The Spectre team is making multi-sig a lot easier for a lot of people. Sphinx is empowering people to communicate on a social media platform that's powered by Lightning. And the Moon Wallet is a remarkable open source, non-KYC, sort of non-custodial wallet built by a team in Argentina that we're very, very happy to support. We've also done some internships with Blockchain Commons so that college students can contribute to Bitcoin and actually help onboard activists, which we think is quite exciting. And again, just with our global focus and our background, we feel like we want to give back, especially to societies that are facing a struggle right now when it comes to civil and political rights. So we're delighted to support core developers like Abu Bakr in Nigeria and Dhruv, who's from India. Our future plans are to continue doing this, probably this year with a heavy focus on UX and on Lightning. I mean, we really believe that the Lightning Network is really going to be a game changer for people living under authoritarian societies worldwide or in difficult currency situations, a lot of folks need to make small payments. I mean, they need to make a $5 payment, a $10 payment. So in the future, that just won't really be that feasible on chain. So it's very important that we have easy onboarding into Lightning, that we have best practices when it comes to privacy, protecting our identities. These things are all much more important for people living under authoritarian regimes, obviously. So you can follow our work at href.org/devfund. And the other big thing that we're doing that's coming up is along the lines of the training that I spoke about, the education, the connections. So at the Oslo Freedom Forum, our annual event, this will take place in Miami on October 4th and 5th. We're going to have a full day in a theater, kind of TED Talk style. We're also going to have a whole interactive day with actually a full-scale kind of Bitcoin Academy, which is going to be a place where activists and journalists and philanthropists and technologists can learn more about Bitcoin from world experts. And we're going to go through a whole day of thinking about what is Bitcoin, why is it important, how do I use it? We're going to have a faucet. We're going to help people get involved. We're going to talk about Lightning, multi-sig. We're going to talk about how to spend your Bitcoin on services like BitRefill or Paxful. We're going to talk about receiving donations and remittances through things like BTC Pay Server or Strike. We're going to talk about who controls Bitcoin and how does it work in that sense from a political angle. That's always very interesting to activists. We're going to talk about the political backstory of the cypherpunks and Satoshi, and we're going to explore the political nature of Bitcoin. We're gonna look into Bitcoin mining and try to help explain why it's actually quite important and critical for the Bitcoin system. And we're also going to talk about building communities. We're going to have folks from Bitcoin Beach come and talk about what they did down there in El Salvador, which is obviously so world changing. So we're excited. These are some of the educators and stakeholders and developers that are going to join us. Some of the teams that'll be down there. I think it's going to be a great program. So you can learn more at oslofreedomforum.com and to apply to join us today. Thanks very much. I appreciate your time. We are excited to contribute to Bitcoin from the human rights angle. We realize we're probably the first human rights group to do this. We want to see a lot more human rights groups get involved because ultimately that's what this thing is. It's a powerful tool for human rights. And thanks again.
All right, guys. I think we are getting to the end of the live stream, at least for me, since we've just been through track 3, and in the Netherlands it's past 11 p.m. already. We have been live for a total of 5 hours, and it has been a crazy stream. I see that we still have 3 tracks remaining: securing the Bitcoin network and regulating Bitcoin and preserving the Bitcoin ethos. Definitely interesting topics. However, wait, let me turn this off. However, I do think, yeah, it just takes too long, guys, because we're going to start with this right now in 10 minutes. And then it still goes on for like over 4 or 5 hours, which is just not doable for me. That will be late in the night. I do think these are very interesting topics though. So you can still sign up, I think, at this link, thebword.org. I hope you enjoyed this restream to YouTube. I think it's more enjoyable because you also have a chat. You can talk a bit. Our prime time was definitely during the talk with Cathie Wood, Jack Dorsey, and Elon Musk. That was actually amazing. We started this stream with 300 subscribers, and right now we are at 1,780 subscribers. I can still do some technical analysis if you guys want. I think that's pretty fun to do. Let's actually go into that. I will put the link in the chat, because obviously if you are here for the B word, you want to continue watching there. But here we're still going to talk a bit about the current price. Let me actually turn on a camera, or at least my docam, as I always have. Takes a little while. All right. Yeah, so what do you guys want to talk about? We can either talk about the current price action, do some TA, or we can talk about all the things that happened during the big talk with Cathie Wood and Musk. It's up to you guys. Let me know in the chat, actually, while I'm actually turning on my doc cam. Feel free to post in the chat. I actually took, let me also take off slow mode, actually, because there's no reason to have slow mode on anymore. Whoop, that's also gone. Sorry for these slow mode measures, and before that you had to subscribe to actually chat, but it was so spammy in the chat, it was actually insane. Slow mode should be off, so you guys can chat if you want. We are going over some technical analysis. Well, I turn on my docam. What was that BTC? Yes. BTC is the big king, right? BTT Moon. So I guess you mean the BitTorrent token, right? I was never a big fan of that altcoin, to be honest. We can go into that later if you like that. All right. Let's start this up. Sorry, that's taking a bit longer, guys. 1,780 subscribers. Guys, I'm still amazed. I'm also still amazed that we still have 500 people in the stream. It's actually insane. So, last time I'm actually going to do this plug, the shameless plug that I do. I mainly trade on Bybit when it comes to leverage trading on the big guys, like BTC and Ethereum. If you also want to trade on Bybit, you can check the pinned link in the top chat or in the description. And if you then trade on Bybit, you can actually get some extra cash for free if you use my referral link. So I think it goes up to $600. So yeah, I would definitely advise it if you're into that. And here we are. Here's the docam. So we are back. Let's talk a bit about Bitcoin, right? So first we identify our environment, as we always do, and we see that we are still in a downtrend. The weekly candle is still red, however, it's very close to flipping. I actually think it has flipped today already. I'm pretty sure it has flipped. We actually went above this weekly level, which is quite key, but we didn't hold it. Let me go into that a bit more. As you know, we draw these weekly levels at weekly closes where the price turns around. So for example, here, 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 and here are main turnaround points for Bitcoin. I actually see at this line it turned around twice, so it's extra strong. All right, let's go a bit more zoomed in. And you really see what happened here, right? So this was this morning, and the hype for this event actually started building up. Mainly the hype for the Elon Musk thing, let's be honest. So it went up, and the prime time was, of course, during the actual meeting with Cathie Wood and Elon Musk. That was during this time. We broke through the weekly level, however, we quickly went back, and it was actually a fake out. So we have to see now how this price is gonna evolve around this level. Does it test it again as resistance? and go down, then it's a good time to open a short maybe here. However, if it crosses again and now doesn't do a fake out, however, it retests this as support, then we can actually go up again. So this weekly level is very, very key. And you can see that it has been key in a lot of other situations as well. You can see here it was tested as resistance. You can see here it was tested as resistance. And actually here it's also tested as resistance. We just had this big fake out during the actual talk. So who is this and when is the faucet? I'm sorry, Elijah, what do you mean? Monk, I'm coming from the south of the Netherlands and don't want to be too specific, but yeah, I'm from the Netherlands. You probably heard that already. But I'm trying to keep the stream in English for everyone. All right, so if we do keep this as support, if we go past this and we do keep this as support, it will be a pretty good long position. And let me actually call out our targets then. If we do breakout and retest, so the retest is very, very important. We can actually go up to this next weekly level because the zone in between is just quite empty, to be honest. Also here, we tested this resistance at this weekly level and we immediately went all the way back to this weekly level to keep it as support. So the other way can also be expected. So if we actually do keep this 32.2 level as support, we probably will keep it as support and then go all the way up to this weekly level. You would put your stop loss then below this low. And you then have a very nice trade with a risk-reward ratio of 2.86. Okay, of course, noob here, enjoying and glad to subscribe. Hey, thanks, Monk. Thanks for the subscription. Really appreciate it. We have grown a lot today, so it's really appreciated everything. All right, so that's Bitcoin on the very short term. So this is all around this weekly level. I do expect that we come back to this weekly level and either test it as resistance or keep it as support. Can you explain the VMC cipher and how you read it? This thing, definitely. There is this guy on YouTube called CryptoFace. You probably have heard of him before. If you have not, he's not really worth checking him out. He just does really big trades, but doesn't explain a lot. But he does have this very useful indicator called Market Cipher. But people recreated this. It's just a lot of indicators matched up together, and you can get a lot of information out of it. To also get it, you just go to indicators and you press Cipher, and you get a free version by Fu Manchu. Actually, take the Cipher B. That's this one. And it's literally a free version of Market Cipher, but then exactly the same, and he charges actually 800 or 1,000 euros for it, which is insane because the tool is just some indicators matched up together. It's not that hard to program. But yeah, how do you read this stuff? You do have the money waves that you see right here, which are either red or green. And usually, if the money wave is in the red, the usual trend is also in the red. And you can read this on any time frame. And then these blue waves are the actual momentum waves. And some momentum waves are actually marked by a dot. And when it's marked by a dot, it's it shows that there might be a bottom. So for example, here it detected that there might be a bottom. That's actually not true. Here we see a green dot that was very close to a bottom because from that point we went further on. Right here, it got a bottom. And the thing is, these momentum waves are very good at predicting these bottoms. That doesn't mean that the price can't go further down in the long run. It's not really a trend where we're going at, but it's the current momentum. You can use this to time your longs, for example. If you want to go into a long position and the price is going down, 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 and you know you want to open a long position because the price is low, and you think it's going up in the long term, you can wait for these dots actually and open position when this dot is actually arriving. You know at least that you're probably around the bottom. So that's where it's useful for. And then you see these smaller lines. These are pretty much used for if you have a very big momentum wave followed by a smaller momentum wave, that usually indicates that there is a shift in the trend. So we first went down a lot, then we went down a little bit more, but just with less momentum. That means that probably the trend is reversing, which is indeed the case. I'm sorry, my mic actually went out. So you see here the trend is actually reversed, and we went up again. So that's what we see right here. Let me try to put on some copyright-free music and hope our video doesn't get restricted. Actually, let's not do that. Let's not risk it because we're live already for like 5 hours. Femex is up to $1,200 right now for referral link 2. Oh, that's pretty interesting. I've used Femex before. But I like Bybit a bit more just as a platform. And then I like to promote a platform that I like more. I also like to promote that earlier, right? Oh, yeah. Good. Looking at a bit longer time frame for Bitcoin. Let's look at the daily. It's quite simple. We don't know whether we are at the bottom yet. I get rid of this stuff right here. We don't know whether we are at the bottom yet. We are in pretty steep resistance right now. We've seen these kind of candles before. There was a lot of hype, and this hype can die off again just by tomorrow. You know how quickly these momentum things can change pretty much in crypto. So I don't know whether we are right here at the bottom yet. I think we are really, really close to a bottom though. I don't think, if you're new to my channel, and you probably are, you don't know this yet, but I think we haven't started a multi-year bear market yet. This is just not the case. People just assume that this run is going to be exactly the same as the previous run. And we have seen already that this is just simply not the case. We didn't have these sustained corrections during this up run right here. When we look at, I have too many indicators on my screen. My browser can't handle it. If we look at this run, we actually see correction after correction after correction, all the way down to this band, this support band all the time. Actually, we should look at that from the weekly. But you see correction after correction after correction. And right now, this run that we had up right here. Let me turn on the weekly. That's more easy to see. This run that we had right here was just all the way up, and we didn't even touch this band. And then we broke through. And the thing is, you can expect a bigger correction after such a move up. That's just the thing. So this is just a major correction, which will also take longer than, of course. But I do think that we are right now in an accumulation zone. You've all heard probably of the Wyckoff distribution. It went around a lot. Here we were in a distribution zone. Right here we are in an accumulation zone, after which we will probably shoot up somewhere in the end of 2021. And I think even we can stretch it in the beginning of 2022, maybe even the middle of 2022. And that's what I think about the Bitcoin market in a macro perspective. All right, let's see how active the chat still is. Do you guys have any requests of me to look at something? Do you want me to explain a bit about Bybit, about the platform? I can do that as well. Like I said, I'm using referral links to it, so I might as well explain. The last video you clicked on, the B word, I asked when it was being streamed to, actually. which is probably around 4 hours ago. So just rewind for 4 hours and you will probably get there. If you want to watch the B-word right now, we're not going to stream it all. We decided to make it quits, call it quits, and then maybe rewatch these things tomorrow. But you can go to thebword.org.org. Tom Muller says Solana. Let's go to Solana. And for altcoins, I always like to start with the Bitcoin pair. And as you can see, I actually have the log scale up. We can also take it off. Yeah, we can see something interesting for Solana, since in June 2020, it already had a big run after a big correction, which is uncommon for altcoins, right? If we compare it to something else, let's say ADA. Okay, maybe ADA is not that good of an example. Doesn't matter. Let's go back to Sol. So it pretty much started, and it already had a very big market cycle in the beginning, which is only positive because we reached the all-time high around April 2021, then saw insane highs. From the bottom here, we went up 3,000%, which is like a 33x. And right now we are testing the waters with this bull market support band on the Sol Bitcoin pair. However, as I always say, all altcoins are following Ethereum. Ethereum is the mother, and all the other altcoins are the children, and the children grow up fast, often faster than the mother, but they always follow the mother. So the real question we have to ask at first is, what is Ethereum doing? We do actually see that Ethereum went up a lot. It's forming this kind of a bull flag right now. And in the bull flag, this means we are zigzagging in this flag until we break out. The question is, how long can this, or how long will this flag still keep up? And I think since Bitcoin is not yet in a very bullish position, I think this will just zigzag down a bit more, maybe to this range. It's not a very predefined range, but I'm just seeing where these resistance points are. Maybe around 0.045, it's really a bottom for Ethereum against Bitcoin. That's what I really project for Ethereum, but that's, again, a macro view. I don't really do day trading on altcoins right now, just because they are so... Yeah, they're so weird to trade, right? So in the general, they are down. And you would say, well, then shorting is a very good idea. However, you have these very rare, very green days, like here on DOT. We go to the daily, of course. Down, 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 down. But then in one day, you can get liquidated. So I try to stay away with leverage trading from these altcoins. I do have some stashed up, by the way. I do have a lot of Ethereum. I do have a lot of Link. I actually don't have any Solana anymore, and I need to grab some more. That's a lot of gibberish. Let's actually do some TA. Alrighty. So what we usually do, first of all, is identify the environment, right? So right now we are indeed in a downtrend. And we see our last checkpoint, so to say, was around here, when we had one weekly green candle. And usually I take these checkpoints to draw a nice Fibonacci retracement. Boom. What we usually see is a point of control around the 0.618 and the 0.666 zone. And these are often zones of high support and high resistance. In this case, it's a bit less clear, actually is keeping this 0.786 as pretty good support, as we only wicked below and didn't have any closes below. And we see right now we are at pretty good support for Solana again. So I would say we have bottomed out for now. Of course, you have to identify that we're still in the downtrend, but I would definitely say picking up some Solana is quite good right now. If we do drop down further, you have to look at these zones of support, of consolidation, which is around here. Here we had some resistance, we had some consolidation, and then we broke through. If we do go back to these levels, which is definitely possible at this stage, a $16 Solana is within the possibilities, which is down around 30. All right, we're back. And this 37% is possible. Let's just not think about it, because I think we are the support zone here and just DCA in. I mean, at this point, you should have already gotten rid of your alts somewhere around here. Of course, it's easy to say afterwards. I wasn't around during this time. But when you see weakness on BTC, it's usually a good idea to get out of alts. We do see some strength in BTC here right now, so now is a good time to get into alts again. And slowly, DCA in, don't put all your stuff into alts right now. But these are things I talk about in a macro trend. But I think for altcoins, you guys are a bit more interested in the macro trend, and that's really the day trading. Yo, Helix, yeah, we're doing some technical analysis right now. We watched the B word. If you want to see Elon Musk, you can rewind around 4 hours, and you can see the talk with him. It was pretty interesting. Pretty good. All right, since the chat is not really active anymore, we still have around 400 watchers. First of all, thank you all today for all the major support, all the likes, all the subscriptions. It has been amazing. I think I'm gonna call it a day. Vamoe, I really can't read what you're saying right now. I'm sorry, man. Yeah, for Bitcoin, this is the zone we need to keep into account. This weekly level. Actually, we are approaching it again. We're having some very bullish momentum right here. We're approaching this. Like I said, this is a very important region. If we do see it as resistance, we're probably going down further. If we do breakthrough as that we did here and keep it as support, keep it into account, guys, and keep it as support, very important. Otherwise, you can fall for a fake out. Then it's really bullish, and I would say open or long. So you can go either way on this level. It's a very important level. Just see what the price action is around it and trade accordingly. And obviously for a short, your stop loss should be above this level, just above this level, and your target should be somewhere where there is some support, which we see from previous supports right here, right here, right here, would be around 31k-ish. Pretty good. BTC dump 18k. I don't believe that, to be honest. I do think we can go down a bit further even than where we are at right now. I saw some targets at 24k. I think that's doable, but too many people are expecting it. I think we are either now at the bottom for BTC as a whole, or very close to the bottom. BTC will not dump. That's also just thinking a bit deterministically, right? Saying something will happen or won't happen. I don't know. I mean, you guys probably weren't expecting the big dump before, right? So what is this Pol X? Pol X BTC. I've never heard of it. I'm sorry. It's probably something on Binance Chain, right? I beg for Bitcoin at 20K. And that's the thing, Monk. Too many people are begging for Bitcoin at 20K, which is why I think it will never happen. People were overly bullish when we were at 60K. I warned my viewers back then, because then I was still active, to take profits regularly. When we are going up, you take profits and you buy back when we're going down. You don't FOMO in while we're already going up. You can buy in small amounts, but you don't FOMO in when we're going up. You wait for a correction, and damn, you got a damn correction. Hey, our candle flipped green. I think that's a good moment to stop. Guys, it has been a pleasure. It was a great stream. We're coming back with a lot of new content, good streams, some background music next time. Thanks a lot for all the subscriptions, for all the referrals. I'll check later if I got any referrals, for the likes. And let's do a live watch party sometime soon again, and our regular TA streams. And there are a lot of videos coming up, including my 1,000 euro trading challenge on Bybit. You can follow along with me if you want. I wouldn't recommend doing the exact same trades. No problem, Monk. Thank you for sticking around. You can follow along with the trades, but I won't copy the exact trades. I would make your own decisions in that, because if you follow me, you're always too late. And you're not learning anything. But we're going to do that challenge starting off very soon on my channel. We'll make a lot of video about it. If you want to follow me more real time, you can check out my Telegram channel, which is in one of the pinned comments, or you can hit me up on Telegram at PongoBTC. Guys, it was a pleasure. See you later, and thanks for watching. Bye bye.